This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mathieu on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Pete Alonso attending in the 7:30 hour. Look forward to that. Lisa Mathieu with us as well. Mets, Phillies. We'll move on from that busy day, Jobs Day.
Yep.
Zentner with us, Sahm with us, and others.
I mean, some huge names. Eric and company putting up a fantastic lineup today here. You know, the whisper number, Tom, on the jobs.
What is it? Is it moved?
A week ago, it was 130,000. Consensus is 150. We're back. The whisper number is now 151. So
it's come up. That's
come
key.
up. Yeah.
It's come from 135 up to 151.
What are you going to do?
A shout out, Stephanie Roth over at Wolf. I thought was really good on
awesome.
this.
Yep.
She was glass half full. We're going to talk to a glass half full guy here in a moment. Jim Zentner, Apollo Global Management, with us for Global Wall Street. We're going to get some really straight talk on the gossip, the gab of private equity and private credit. Mr. Zentner will join us here in a moment. Let's get right to it. We're on YouTube. Good morning across the nation. After your commute, subscribe to YouTube. Subscribe to Bloomberg Podcasts on YouTube. On your morning commute on Apple CarPlay, Android Auto. On the quarter, good morning, 99.1 FM. Do we have a signal in Philadelphia?
No.
Phillies, Mets? It'll
I
be
don't know.
something.
I'll work on something.
We'll work on that.
It's a whole satellite thing.
We'll get a signal in Philadelphia.
Yep.
Good morning here,
Sirius
Bloomberg
XM.
1130 in New York, and of course 92.9 FM in Boston. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mathieu.
And we've got futures advancing. This is ahead of that key jobs data. It's going to offer some clues as to where interest rates are headed. Right now, let's take a look at it. NASDAQ futures up about 0.2%, 56 points. We have Dow futures up about 21 points. S&P futures up about 0.1% or 10 points. We have the two-year yield, 3.72%. That's up 1 basis point. The yield on the 10-year, 3.86%. And that's up about 1 basis point. To commodities, oil set for the biggest weekly gain since early 2023. That's due to further escalation in the Middle East. Right now, we have Brent crude at $78 a barrel, WTI crude $74 a barrel. Shares of Spirit Airline taking a hit, down 37%. This is after a setback, efforts to restructure its debt, avoid filing for bankruptcy. Sources saying that month-long negotiation with bondholders failed to reach a deal. And more advances in Google's AI-driven makeover. The company is pumping up its search engine with technology. It's going to allow users to voice questions and images, organize an entire page of results as well. That's tech for you. That's a Bloomberg Business Flash. Tom and Paul.
Surveillance correction, Lisa Mathieu. We don't have Pete Alonso. I'm so fired up. We don't, his people just called the bat phone and said we don't have him. We're going to play the wonderful.
You got Jim Zentner.
How it was great. It was magical. This is a joy. Jim Zelter's with us with Apollo Global Management, and like a ginormous organization. They got people that do different things. And we're going to talk to him about this really interesting thing for Global Wall Street, which is the mating of Apollo Global Management with Citigroup. And I also want to talk to him about the dirt that's out there, where it's back and forth. Bloomberg Opinion article here recently, Aaron Brown defending private equity where others are going after you. I want to get that out of the way right now. All the propaganda of private equity is growth, 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 growth. Things are great. But there's a real worry about liquidity. Your supporters, not related to Apollo, say this is baloney. There is not a liquidity issue, while others stand up on a podium and say, yes, there is. How do you see it, Jim Zentner? We're going back. This is a traitor. He knows viscerally when the bid walks away.
Well, good morning. Happy Friday. I think what we're seeing, Tom and team, is just an evolution of the financial system. We put a lot of rules in. A lot of rules were put in place post the GFC with regard to too big to fail and how banks operated. And we as a government and regulators said we want to have banks that were not as too large in the financial services system. The reality is we didn't see the impact of that because of 10 years of lower rates. So we've really only seen it the last couple of years. And when you take a step back, the provision of credit can only be provided by two precincts, the banking system and the investment system. And the U.S. has the capital markets envy of the world. We have the greatest financial system.
Right.
In the last 20, 30, 40 years, private capital, whether it's insurance companies, mutual funds, now alternative investment firms, have played a larger role. It's diversified all the funding and financing.
But tell me, I want to hear exactly how you people are dealing with rumors, innuendo, gossip, that your people can't get their money back, part of their money back. There's NAV development to get some kind of cash flow. So address that right now.
So the public reality is we don't have daily liquidity in our products. When investors, big investors and small around the globe, they give us money, they give it to us for 3, 5, 7, 10 years. And whatever the mandate they give it to us at, we match that on investing. And half of our capital comes from institutional investors. The other half comes from our annuity business, where we have liabilities for 7 to 10 years. So we are not in the daily liquidity business. And you know, I do come from a trading desk. I was on a trading desk for the first 15 years of my life. And today, when you think about how large the bond markets have grown versus the actual trading capital, it's 1/10 of what it used to be in terms of the amount of trading capital. So we have a big investment grade corporate bond book. The liquidity that we think is there is not there. So even in what people perceive as public markets, the liquidity is faint if best.
Fascinating.
Interesting. So, Jim, talk to us about the private credit business. I would think over the last 15 years, it's been one of the amazing growth stories on global Wall Street. How does Apollo play in the private credit business, and kind of what are your goals going forward?
So when I got to Apollo 20 years ago, when you wanted to buy non-investment grade credit, you bought high yield bonds or you bought leveraged loans. Now, the reality is leveraged loans actually started as an asset class in the mid-90s. Those were illiquid and non-tradable. And about 10 years ago, there was a third tool created, private credit, which is just a custom loan done by one party to another party. And that's the third product. So it's gone from 0 to about $1.5 trillion. It's about a third of the leveraged finance space today. And it fits a need. Not every company should do private credit, but those that do, it fits a very, very unique need. If you are a buyout that's going to be a serial M&A acquirer and you don't want to go back to get amendments, it fits a very good need. If you are in a growth buyout, it serves a good need. And so it's a product that's now here to stay. And if I recall earlier in my career, it was the public outcry about how bad high yield bonds were. It was the public cry about how bad loans were. It's just evolution. It's simple as that.
You know, I started my career at the Chase Manhattan Bank, going through the Chase training program, credit trading program.
Nothing better.
We lived on leveraged loans. We made a killing on leveraged loans. I'd syndicate all the risk off my books and do it again the next day. How did I lose market share to guys like you?
Because and that's a great perspective. If you look at high yield loans and high yield bonds, they are not custom products. They're priced and created to the marginal buyer. And when you don't have the ability to listen to your client, what your client needs, you lose market share. So the high yield and loan market got too draconian in their demands, and others said, wait a second, there's a better way to solve these problems.
A recession comes down the pike, and a meaningful recession. Are you guys going to get exposed? Are you guys being private credit for leverage?
I suspect if you look when a recession finally does hit, and we look forward to it when it does, not on the immediate calendar, I suspect you will see private credit wildly outperform public high yield and loans. Better companies, larger companies, better covenants, better structure. That's a period of time we look forward to.
Jim, I want to get this in. Thrilled that you're coming back with us on this busy jobs day. We have Mr. Zelter with us here to 7:30, which is a good thing. But I want to frame this out right now. Apollo Global Management, who are the Wonder Boys now of Global Wall Street, team up with Abu Dhabi and Jane Fraser. What a hell of a combination. I want to go to the gossip. How did that happen? How did you get with Mubadala and with Citigroup to do your private credit deal, which everyone in the street is transfixed by?
Well, it's been over years. I used to work at Citi. The folks there who run that business, we've had a great working dialogue. We've done hundreds of transactions together. The same with Mubadala. We've been over there for 2 decades. And, you know, this is not just one meeting, a cup of coffee, and you sign a document. This is seeing us through periods of volatility, We did well for both parties during 2020 when we had COVID. So it was a view of great relationship, both seeing where the puck was going, and
hockey talk.
Exactly. And third, just making sure if you're going to go big. And so we wanted to create something that was really a answer for the actual clients.
This is important. It's hockey talk. You see, I got that in there.
know.
You don't understand why.
No.
It's because the Pittsburgh Knights could move the puck up the ice.
Exactly right.
The only team they had trouble with was McQuaid. It was McQuaid in Pittsburgh, and they would move the puck up the ice. We're going to continue with Jim Zentner here. Thank you for listening this morning in Bushnell's Basin. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul. Lisa, ports are back up this morning after the dock workers' strike threatening the nation's supply chain has been suspended. The agreement ends the biggest disruption of its kind in nearly a half a century, threatening shortages of everything from food like bananas to car parts, home appliances, and even furniture. Some Americans even resorted to panic buying, reminiscent of the early days of the COVID-19 pandemic. President Biden applauded both sides for coming to the table. Bloomberg News senior editor Bill Ferries.
What is the political impact? I mean, at the very top of that list of things would be that it takes a big headache and potentially worsening headache off the plate of the Democrats just 4 weeks before the election. Listen, the White House, the administration has a lot on its plate right now. It's dealing with the aftermath of Hurricane Helene. There's still, search and rescue going on for that.
Bloomberg's Bill Ferries. Yesterday, President Biden flew to the South to inspect the damage wrought by Hurricane Helene. After visiting Florida, Biden then visited a devastated farm in Ray City, Georgia.
We can't wait. Can't wait. People need help now.
At least 215 people have died from the storm. Kamala Harris and Donald Trump remain busy on the presidential campaign trail. Harris is visiting the Union stronghold of Flint, Michigan today. Yesterday, former GOP Congresswoman Liz Cheney appeared at a Harris rally in Wisconsin.
He is petty, he is vindictive, and he is cruel. And Donald Trump is not fit to lead this good and great nation.
Harris thanked Cheney for her support and courage. Meanwhile, the former president responded after a campaign stop in Saginaw, Michigan.
Liz Cheney is a stupid war hawk. All she wants to do is shoot missiles at people. I really think it hurts. I think, frankly, if Kamala, I think they hurt each other. I think they're so bad, both of them.
Today, Trump is heading to Georgia and North Carolina. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Zelter just had a tantrum. He says if we don't talk about Manning Dees and a 5-0 Duke,
I know.
It's a juggernaut. I mean, is it SEC bound? Is it going to be like January 3rd? I'm forced to watch this.
No idea what's going on. But anyway, 5-0, we're happy. He's a good coach.
He came from Penn State.
He came from Penn State, defensive coordinator there. Did really well there with the defense there. Before that, he was at Miami. Not so good as head coach there. So we'll see what he does here with the Dukies.
I mean, he turned down the San Francisco 49ers because of the Zelter Foundation. They stepped up with a total team package.
Exactly.
Duke football, 5-0. What is that about?
I don't know. We're good. We'll see. They got some tough games coming up. We'll see how good they are.
Let's see this weekend versus Georgia Tech.
Yeah, exactly.
The rambling wreck of Georgia Tech. Let's see if they can step up.
Exactly. That will be good. We will see Georgia Tech Duke. We'll have those results for you on Monday. We've got to lift to the market into Jobs Day. We'll go beneath the headline numbers at 8:30. Stay with us on YouTube on your commute across America. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mathieu. We have futures on the rise on this jobs day. Investors kind of awaiting data that's going to help identify that path for interest rates. We have NASDAQ futures up 0.3%, about 70 points. Dow futures up 0.1%, 46 points. S&P futures up 0.2%, or 14 points. The 2-year yield at 3.72%. That's up 1 basis point. The yield on the 10-year 3.86%, and that's up 1 basis point. Shares of EV maker Rivian down more than 8%. The company cut its production guidance for the full year. That's due to a supply shortage. And we'll stick with EVs. We'll head to Alphabet's Waymo. They're expanding its robo-taxi fleet with electric vehicles from Hyundai. They're going to be built in the U.S. And meanwhile, sources say Hyundai seeking a valuation of $19 billion for the initial public offering of its India unit. Now, that could be the nation's biggest share sale. And finally, sources saying the EU has voted to impose tariffs as high as 45% on electric vehicles from China. Now, Germany, 4 others, they voted against that proposal. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mathieu. That's a Bloomberg Business Flash. Tom and Paul.
Lisa Mathieu, thanks so much. Jobs Day coming up. Claudia, Sahm, and Ellen Zentner with us around the 8:30 report. Some other good voices, good equity voices. Well, Kim Dawson darkens the door here in a moment. Right now for Global Wall Street, a real treat. With us, Jim Zelter, co-president of Apollo Global Management. Jim, I want to read the propaganda from Abu Dhabi, Citigroup, and you. Quote, "We are pleased to form a first-of-its-kind scaled direct lending program with Citi, preeminent banking partner and leader in capital markets. Our collab," it's like in Hollywood you say that, "our collab will allow Citi to enhance its clients' offering, et cetera, et cetera, et cetera." What are you actually going to do?
So if you look at the last decade or so, in the leveraged finance market, the banks have lost share with the direct origination private credit product. But they also have the client relationship, they have the M&A, they have the advisor. So what we're really doing is we are the capital behind their relationships, such that they can actually be at the table. And remember 20 years ago, 25 years ago, the concept of one-stop shopping, Glass-Steagall, investment banking and advice. Now this is just asset management, origination, and advice.
With great honor to the careers in this room, is this the new chemical bank? Is that really what we're doing?
No, it's the evolution of finance. It's really where we believe that when you think about 100 years ago, back in the 20s, when utilities and railroads were getting financed, they got financed not by banks, but actually by insurance companies. And when you think about what's going on in the last decade, you know, that long duration capital should be what is funding the global industrial renaissance. There's massive needs today between power, digital, energy transition, and as the world is focused on shorter and shorter capital bases because of ETFs, multi-strategy hedge funds, and indexes, there's a massive gap for long-term capital. And whether it's pensions, endowments, foundations, or firms like us, we're filling that gap.
Tom, Apollo Global Management Company is a public company. APO is a ticker, $75 billion market cap. Stock's up 40% year to date, up 50% over the past 12 months. And I know, Jim, you guys had an investor day just recently. What was the key message you wanted to get across to the street?
Well, the key message, the North Star really was we were building a financial services firm of the future. And what we were really doing, we're focused on 3 or 4 big areas. One is funding that global industrial renaissance. Funding retirees around the globe, funding individual investors in the U.S. and the G7 countries, and finally this whole convergence between public and private, between the debt market and the equity market. Those were the 4 big themes we talked about. And you know, our business, we held one about 4 years ago, and for us it really is the internal North Star as well as a message for the outside world.
Where are you guys? I feel like you guys being the private equity, private credit, alternative asset management folks, you're always in the capital raise mode. But where are you today in terms of your capital, where you want to be, where you're looking for capital, where you're finding capital?
So for us, we spend this year. We'll raise 130, 140 billion across the board this year.
No, you're not. Where are you getting that money?
And well, about 70 billion will come from our retirement services business. Wow. The rest will come from our asset management business. But it's a combination of institutions and and global wealth retailer on the globe. I think that we talked about one major topic. Everybody thinks the world and the constraint of our business is on the fundraising. We turn that up on its head. We think the challenge is origination and sourcing new ideas. So we as a firm, and me personally, I've spent the last decade building up our origination platforms. Right. We have 16 of those where every day, whether it's aircraft finance, solar finance, inventory finance, that's the conundrum. The conundrum is not raising the money, it's finding great places to put it to work.
Let me put it to work for you right now. Can you make some, it's a slow news day. Can you make some news here that you're going to take a minority interest in the Washington Commanders / Redskins?
I think
you talked to Josh this morning. Can we get a release on this?
I think Josh is having a great season. They're off to a great start, and he's doing an amazing job with that platform and that sports platform. But I'll let Josh handle the football questions.
You're a bulletproof numbers guy. Is there any way you could possibly lose money by taking a stub interest in the NFL?
You know, listen, sports are one of the few areas of live action where people still want to tune in. Whether it's basketball, I'm more of a basketball fan than a football fan personally, but sports is where it's at for a lot of news and sports certainly.
All right, so where are some of these opportunities that are new for you guys? Because again, you guys talk, and I've heard some of your peer groups say the same thing. It's hard to find really good opportunities for our capital.
For us, we've really, if you look at our firm today, when I got to Apollo, it was a PE firm with a credit business.
Yep.
Now, if you look at our business today, $700 billion, about 100 in private equity, 100 billion in real assets, and 500 plus in credit. We spend most of our time on the investment grade world, and in the last 12 months, whether it's Intel, whether it's Vonovia, whether it's AB InBev, a lot of these companies need capital in scale, and the capital markets are not the home for that success.
Tell me about a theme. This is your baby. Yeah. You guys, good morning, Roger Ferguson. He and I agree the retirement plan off ERISA 1974 is a disaster. How's Athene going to right the American retirement ship?
Well, I think we have a silver tsunami around the globe. Retirees have not been served well. If you think about what's going on in the U.S., some countries, whether it's Australia, Canada, or others, have created more of a sovereign wealth system or a retirement system. But we have a real challenge in the U.S. And over the last decade plus, fixed annuities have really hit a mark in terms of being part of the retirement calculation. We created Athene a decade plus ago, and today it's more than 200 billion of assets in terms of how we really treat and are the solution for many retirees. So the fact is, while we may not wish it, we're all getting older every day. That's the reality.
Did we bring him in to say that?
Yeah, thanks.
And there's more of us that are hitting that period, and whether it's in the U.S., Western Europe, or in parts of Asia, Australia, we are solving those needs.
I'm out of time. I got 30 seconds. Regulation and the path forward for PE. Are the regulators going to get in the way of what you're doing?
Well, I think we have to conduct ourselves in a very in a manner where we are really leading the charge of dialogue. There was just a headline up here about in France and Germany, government leaders are saying they need to free up their economic system to meet.
Draghi's on top of it.
Exactly, Draghi's all over it, and we have to be very cognizant of the regulatory backdrop. We're a player.
Jim Zelter, thank you so much. With Apollo,
always
global manager, you look forward. Season tickets, Commanders.
Well, he's got to get rid of the one and done at Duke University. Can you make that happen?
I would like to.
Okay,
I'm not a big fan.
Jim Zelter, thank you so much. We look forward to those Commander seats for Nathan Hager and Bloomberg Daybreak in Washington. They'd be good. I like it better than the Commanders. The Washington Apollos.
Yeah, I can see
that.
To
me, it's sort of.
Well, what the short. I mean, what's
it's magisterial.
Yeah, I like it.
49ers, Apollos. It works.
Yeah, I like the Clevelands, the way you go.
Yeah, can you tell Josh we want him over here the day you make the announcement? Jim Zelter, thank you so much. It is Jobs Day, the news flow extraordinary, and with great seriousness in the Eastern Mediterranean, substantial news flow as well. Leading the data today, without question, oil up another point. Brent crude, $78.69, hasn't tipped $80 a barrel yet, but we're watching that closely. At 8:30, Claudia, Sahm. We're out on YouTube. Subscribe to Bloomberg Podcasts, Apple CarPlay, Android Auto. Good morning, Washington and Boston. In New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mathieu. We've got green on the screen as investors look for more signals on the health of the U.S. economy. With today's monthly payrolls report, comes out at 8:30 Wall Street time. The unemployment rate expected to hold steady, 4.2% in September. Payrolls expected to rise by 150,000. We'll get to NASDAQ futures up 0.4%, 85 points at 20,077. We have Dow futures up 0.1% at 42,380. S&P futures up 0.3% at 5,767. The two-year yield, 3.72%. That's up 1 basis point. The yield on the 10-year, 3.86%. That's up 1 basis point as well. Global shipping stocks falling. This is after the dock workers, East and Gulf Coast ports agreed to start moving cargo again. They're going to continue collective bargaining. Maersk down about 5% in Germany. We have Zim Integrated Shipping down 8%. And food prices on the rise. The new index from the United Nations Food and Agriculture Organization, it shows global food prices saw the largest jump in 18 months in September. Sugar prices, that's leading the increases. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thank you so much. Greatly appreciate it. Nice lift to the market here. NASDAQ up 0.5% as well. Thanks to Jim Zelter, Apollo Global Management. We did a global Wall Street digression there. I learned a lot about Citigroup and Abu Dhabi and what they're doing at Apollo. Now we get back to brass tacks like clipping a coupon or finding total return. Christina Campmany, Global Debt Senior Portfolio Manager at Invesco on fixed income before this jobs report. Every morning when I come in, I look at my 10-year real yield, 1.65 right now, a little bit elevated off the gloom of a week ago. What does a 10-year real yield convey to you as you try to game out what to do with debt out 1 year?
Look, I think we sit with a backdrop of solid growth and things are looking better, and we have the Fed easing, we have China stimulus coming in, and I think all of those things together means that we should have higher terminal, and so real yields should probably be higher than where they are. We should have a steeper curve because we're still talking about sticking this soft landing, which is what the goal of the Fed has been. We're
going to normalize, and I would guess a huge body of the public doesn't know what normal is. Am I right?
Yeah. I think that's right. And I think even as markets, we're sitting here trying to come up with what's normal. The range of what we're expecting for payrolls across the street is so wide. The break-evens of what is break-even payrolls for the market, those numbers are so wide, right? Like the Fed is responding to data in real time because there's no confidence in the forecast, and I think market participants have to do the same.
Zero Hedge did a terrific 20,000-word summary of the fan distribution of the jobs report. That's how stupid it's become, Paul. Don't fall off Zero Hedge. Everybody's gaming this thing out like it's a football game.
People are saying it's going to be the most important jobs number of the year, given some of the fuzz that's going to be happening in the next couple of months in terms of the data. So how much, I look at my fixed income space this year, the best performance has been in U.S. high yield. Talk to us about the high yield business. Are we getting compensated for the risk we're taking?
Look, our preference is to stick a little up in quality.
Okay.
I think you look across all of these metrics. If I just look at 10-year treasuries, they do still seem rich. Corporate spreads are tight, IG spreads are tight, high yield spreads are all tight because and obviously equity valuations continue to be robust. When we step back and say, where do we want to invest from here? I think it's still the front end of corporate, short end corporate paper is where you can have some comfort because you say, if we can stick the soft landing, then even with tight spreads, the all-in yields there are okay. Level of rates still makes it a decent investment, and then let's wait and see the backdrop of how these other uncertainties shake out.
The Fed's not the only central bank cutting rates. Everybody but the Bank of Japan is cutting rates. So your title says Global Debt Senior Portfolio Manager. Where do you guys see opportunities outside of the U.S.?
Absolutely. So a big talking point that we've had all summer is the Fed needs to embrace on their easing cycle, and their tone will really set the field globally. And we had already seen the beginning of the easing cycles from Canada and the ECB and the BOE, but I think you've really started to see this shift this week of the Fed went 50. Maybe we should step up our pace. And I think not that it's a race to the bottom by any means, but it gives this green light that you can kind of adjust and normalize. So when we look globally, where do we see value in markets? I think the Australian market offers a lot of value. I think there is value out the curves in Europe and UK versus the US as a cross-market trade.
Invesco has a cottage industry over decades of what's called the senior loan market and other interesting, almost derivative-like instruments that 98.2% of my audience doesn't understand. Are there shadows there? Are there unknown unknowns in credit risk in that, particularly buttressed up against the real estate debacle?
Look, I'm not our loans expert by any means, but when we look across, because within even our purvey of how we invest, we're looking rates, credit, FX, across EM and DM markets. We're covering a lot of things. And coming out of the COVID period, there was such stress in the market that you actually had a big cleanup of corporate balance sheets, and you got rid of a lot of the like murky stuff behind. So as much as we talk about these debt cliff walls of when people, maturity walls, when people and corporations need to refinance, we actually think that the underlying strength there, both in Europe and the US, is actually all right. We're not too concerned about it.
September was, I guess, in the investment grade market, the biggest market ever for new issuance. I mean, everybody was hitting the market. So when Goldman Sachs and Morgan Stanley, the salespeople, when they're selling the deals, do you pick up the phone?
So again, within our team, we have different people that are focused on different things. September is always this robust month. Is there still value there? Absolutely. And I think what we always forget, and sometimes even we should like look at all of this money going into corporates, even though spreads are so tight. There's constantly money coming into bond funds that needs to be put to work. And I think people are aware of the seasonals and have to play when supply is there.
Okay, you got a meeting at 10:30 every Wednesday where a bunch of smart people like you sit around a table and you ask the short-term paper beast, you ask them, what's cash doing? What's cash doing?
Look, I think quarter end this in September was a little hairier as it was last September Q3 quarter end. I think people are a little worried of, is that telling for year end? And do we need to be more concerned about liquidity in the market? We want to avoid the September 19th stresses in the front end. But I think things generally look healthy. I mean,
but as money market funds are coming down, what are we actually doing in our cash decision? I'm asking for Paul from New Jersey.
Look, I mean, flows tell us this week you've had massive amounts of money still coming in. I think this some sort of barbelled approach of you can be in the front end and also money markets, and I think money is parking there with uncertainties around election. And if you I think there's a lot of hope out there that you get dips in risk asset to be able to then deploy that. But all-in yields in the front end are still attractive for sure.
What sectors screen well for you guys these days? Are you spending time on any particular sector these days?
Again, the way we look at the world, we're kind of macro top down. So we'll dictate it by the zip code first. Do we like Brazil as a story? And if so, then within Brazil, what kind of allows
Australia.
us?
Does that mean on a rebound with Australia, you like China?
China actually, so you have all of the stimulus that's come out, and it seems to be coming out in drip drab rather than some big bang policy. There seems to be appetite. There seems to be appetite to backstop from the government to backstop the equity market, to stabilize the currency. But I think underneath it all, and you'll have some initial sugar, underneath it all, there doesn't seem to be a willingness from the government to change and support to a consumption-led growth. So I don't think China's somewhere that you're going to see a tremendous engine of growth.
What's your non-farm payrolls number at 8:30?
I don't have a specific number, but I would tell you, I think the whisper on the street is above 150, and it's the risk of, do you get a 200 number, and is that good or bad for the market, and what does the market actually do? I mean, again, when we step back to the Fed, I think in either case, we should probably get another 50, and the number, it's because the Fed is saying, like, we want to stick the soft landing, like, it's okay, we want to normalize and have some kind of balance and not have a breakdown in the system.
The economist, Christina Campani, with us from Invesco. Thank you so much. Christina, greatly appreciate it this morning. The market seems to agree with Ms. Campani. We've got futures up 16, Dow futures up 60. VIX comes in, it was a 20 level. into 19.94, and the yield space, as they say, yields up fractionally, just a teens weens is how I would put it today. Within 1 hour of the jobs report, with our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Vice President Kamala Harris heads to the Union stronghold of Flint, Michigan today. Yesterday, she got support of her own on the campaign trail from Republican Liz Cheney.
A broad coalition has come together to support Vice President Kamala Harris. Now, we may disagree on some things, but we are bound together by the one thing that matters to us as Americans more than any other, and that's our duty to our Constitution.
The former Congresswoman and longtime Trump critic joined Harris in Wisconsin. Harris says Cheney's endorsement matters a great deal.
It is so admirable when anyone does it, and especially when it is difficult to do in an environment such as this. But Liz Cheney really is a leader who puts country above party and above self, a true patriot.
Meanwhile, former President Trump told Fox News that Cheney's support would hurt Harris.
Liz Cheney is a stupid war hawk. All she wants to do is shoot missiles at people.
Today, Trump visits Georgia and North Carolina. U.S. dock workers agreed to suspend a 3-day strike that had paralyzed trade on the East and Gulf coasts. Workers returned this morning, and the two sides will restart negotiations on a long-term agreement, which will include a pay increase of about 62%. In baseball, the Mets advanced after beating the Brewers in the decisive third game of their NL Wildcard Series. Pete Alonso smashed a 3-run homer in the ninth to put the Amazings ahead.
Williams sets. Here's the pitch. Swinging a fly ball to right field. Pretty well hit. Frelick back at the wall. He jumps. It's gone. He did it. He did it. Pete Alonso with the most memorable home run of his career. Pumps his fist as he rounds second. It's a 3-run homer. He's given the Mets a 3-2 lead.
They won the game 4-2. Another home run tacked on. Alonso after his looky what he can do moment.
This is such a special effort all series. Man, we've worked so hard all year to get to this point. I'm just so happy I was able to contribute.
The Mets now face the Phillies in the NL Divisional Playoffs. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Oh, Mike Piazza, is it like 2 pitches before this home run, they were trying to figure out what they do with him next season, where he'd go? And now he's got lifetime employment, right?
Oh, yeah. A lot of jobs got saved.
Man, a lot of jobs got saved
with that Alonso blast.
Unpack the cardboard boxes, Haley. We're staying. We're going nowhere.
That's true because Alonso, the bat was kind of slumping before this moment happened.
Paul, how do you trade that? You can't trade the guy after that.
I don't know, but you also can't pay him the money he wants to, so I don't know what's going to happen.
Are you kidding me?
Because they want Juan Soto is what they want. But that Howie Rose call was a phenomenal call.
Oh, man.
Howie Rose nailed it.
I couldn't do it because they'd have to hit the dump button if I'm on there. I'd lose my mind.
You're better at this, Michael, than we are. Culturally, what does Phillies Mets signify?
Well, you're still kind of in that tri-state area deal. Yep. There's still that rivalry, and
Turnpike
you know
series.
Philly fans.
Okay.
Philly
there's
fans
there's a signpost in Connecticut. This way Yankees fans, that way Red Sox fans. In New Jersey, Paul, where's the Phillies Mets signpost?
Trenton, New Jersey, the Delaware River. Boom, that is it.
That's it.
Sand. Yep. And so growing up in Trenton, we had New York stations and Philly stations. It was the best TV market in the continental United States before cable TV because you got both. So half of Trenton is Philly, half of Trenton is New York. I was New York. My dad was Philly.
I mean, short of Dodgers, Yankees. I mean, this is like the best thing for baseball.
This is we got so the AL Central Division in general. I know we were talking about NL, but I'm still stunned. I'm still shaking.
The Central.
Yeah,
amazing.
Good stuff.
Well, it's fun. Michael Barr, thank you for that. And we're trying to get Mr. Alonso Friday. We'll see if we can get him on the show. Big fan of all that. Futures up 16. It's Jobs Day. Please stay with us. That information at 8:30. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mathieu. Happy Jobs Friday. NASDAQ futures right now up about 0.3%, 68 points. We have Dow futures up 0.1%, 60 points. And S&P futures up 0.2% or 15 points. Over to the bond market, we have the 2-year yield 3.72%, up 1 basis point. The yield on the 10-year 3.86%, and that's up 1 basis point. To commodities, oil extending its rally following its biggest one-day jump this year. We have Brent crude up more than 1%, $78 a barrel. WTI crude $74 a barrel. Companies making news. Cisco agreed to invest in AI startup CoreWeave. It's a transaction values the company at $23 billion. A new FDA documents it shows Thermo Fisher's manufacturing plant that produces infant RSV drugs. They repeatedly breached rules to ensure its safety. Now that's according to Reuters. Its shares down about 1%. And the world has a new second richest person. Mark Zuckerberg has now passed Jeff Bezos on the Bloomberg Billionaires Index. It's not Sweeney. Shares of Meta climbing. Elon Musk, yes, still tops the list. That's your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Greatly appreciate that this morning. You're on Jobs Day. Futures up 60. Paul, you look at the screen. I mean, like, people have already voted.
Yeah.
They're saying great, whisper numbers up.
Yeah, we'll see.
Yelena Shulateva joins us now, BNP Paribas. And Paul, is she glass half full? Glass half empty?
I don't know. We'll see here. Let's check it out. Yelena Shulateva, senior U.S. economist at BNP Paribas. Yelena, A, what are you looking for in the non-farm payroll number today? And B, just broadly, how do you feel about this U.S. labor market?
Well, we are at 150 and 4.2% on the unemployment rate. Nothing really exciting, in terms of any surprises we're expecting. I think this report will be a cleaner one right before the next payrolls report comes in just a few days before the election. And that's why it's very important, probably more important than the next one. And I would say that in this report, I will be looking at how much the recent uncertainty about the election outcome is weighing on companies' hiring decisions.
Yelena, do the revisions matter today? I mean, the reality is, folks, a number comes out, and then I look at the revisions, and I subtract the revisions down if, they're lower numbers. Do you do that, Yelena?
We do. We look at all of the above. We look at revisions. We look at the details. First thing we look at, obviously, is the number itself and the unemployment rate. But as we dig deeper into the details, what I will be looking at is part-time versus full-time workers. If that is still going, there has been some pickup in part-time for economic reasons. I will be looking at whether there are layoffs versus hiring freezes. This is the important stuff that will matter in a case of somewhat uncertain outcome.
Paul, you and Lisa get all the love notes. I get the hate mail, and I can tell you the most mail I get is that the unemployment rate, the labor report doesn't show the gloom that's out there, the reality that's out there for getting full-time benefited jobs.
Yeah, and that kind of goes to the point, Yelena, that Tom brings up here. I mean, I guess a lot of folks are saying, hey, if you look at the underlying data, 150,000 jobs, 4.2% unemployment, it looks pretty solid out there from a labor perspective. But the recent trends, Yelena, I guess they could be troubling. How do you think about some of the near-term trends that we're seeing?
I think a lot of this weakening in the hiring pace has to do with uncertainty about the election. And it's really, that point at which we will know what to expect. And, some of this uncertainty, or a lot of this uncertainty, will actually be eliminated, hopefully, if we find out the results right away. But my point is that once we know what the outcome is, whatever the outcome is, companies will have more certainty about how to deal with it going forward, and they will adjust. So I actually think that we will see steadier job gains going into the beginning of next year as companies expand and that economy continues to grow.
Elena, thank you so much. We got to go to breaking news, but thank you, and I really look forward to catching up in the coming days. Elena Shulateva with us with BNP Paribas. The one guy who stayed on top of the story that's out there with the 8 other distractions, the horrific hurricane results that we see, all the politics of the moment. You know, what are the candidates doing today, Paul, besides yelling at each other?
I don't know.
I mean, that's it. We go to our expert, Joe Mathieu, with us with Balance of Power. Joe, if all of this foolishness wasn't going on, there'd be only one topic, which is, are we putting our military forces in harm's way in the Eastern Mediterranean? Are we applying military force to Iran this weekend?
Well, applying is an interesting word there. Defending, I suspect, is what the Pentagon would suggest. But yeah, we've surged thousands of troops into the region, and we have to remember that while this most recent attack by Iran against Israel brought defensive measures from a couple of U.S. destroyers, it was airmen and sailors who helped to knock down a couple of hundred drones and rockets from Iran back in April. So we do have to acknowledge the fact that there are American service members who are potentially in harm's way in our effort to defend Israel. This is why we're so worried about a wider war.
Bloomberg got a great map north to south on the Iranian border of where various and sundry targets are. From your sources at Balance of Power, what is the Pentagon considering in assisting Israel, or have they just said, get out of our way?
I think it's more get out of the way here, Tom. I don't think you're going to see the U.S. take part in an attack on Iran. But what form that attack will take remains a big question. People are assuming that we're talking about ballistic missiles, maybe some sort of ground incursion. But let's remember Stuxnet 20 years ago, almost at this point, Tom, could there be a cyber component to this that would allow Iran to say, hey, nothing happened here, they barely laid a glove on us, but in fact could instill some real damage if they tried again to attack, for instance, the centrifuges in their nuclear program. Getting to those bunkers deep underground and deep under mountains with munitions is a much taller order.
Joe, to what extent is the White House, the administration, frustrated, perhaps, that they don't have more influence on Netanyahu? He seems to be just kind of ignoring any and all calls for moderation over the last,
I'd say that's
several months.
It's probably a 10 out of 10 here, Paul. I don't know if the White House has any influence right now. The deteriorating relationship between Joe Biden and Benjamin Netanyahu has been widely noted, and weekly calls for restraint have not been heard. That's why we're on the precipice here, and a very concerned White House. If this coincides with our election in November, that's where Tom Keene started. We've got problems.
How are the candidates adapting the news flow? Folks, my basic theme here is if none of this was going on, there would be no other topic in America this morning, even the Jobs Day here in 37 minutes. Joe Mathieu, the Harris-Trump distinction on what we see in the Eastern Mediterranean.
It's all based on assumptions right now. People think that Donald Trump will be friendlier to Benjamin Netanyahu and Kamala Harris will not. But the fact of the matter is, if you look at the spoken words, the actual words that are used by Kamala Harris, they sound a lot like Joe Biden. Look, we talk about October surprises. This is like the October slog. We've got 3 of them going right now because that dock workers strike isn't over yet, guys. They still have to figure out the automation component. All 3 of these could bend the race in one direction or the other as we're sitting here in a 1-point race in the states that count.
Well, so on that race front there, when we have a lot of news data points, as you point out, Joe, I mean, Liz Cheney endorsing Kamala Harris. What does that mean for you folks in Washington?
I'm not sure if it means anything. It's a heck of an optic to think that these two who don't agree on a single political issue are sharing a stage together like this. She said she's been a Republican her whole life since before Donald Trump started spray tanning. And so this ought to mean something. But does that take people out of the mushy middle here one way or the other? I don't know. Look, they're trying to do anything they can to get every vote that counts.
I mean, Balance of Power is extending to a 6-hour broadcast here on a Friday. Matthew's not going to walk out of the building until 8 p.m. Away from the Eastern Mediterranean, what's your number one topic as you and Kaylee plan the day?
I'm watching Georgia today, guys. Donald Trump and Brian Kemp. Are you kidding me? Remember, Donald Trump called him a bad guy and an average governor. Today, they're actually going to be together in Georgia as they were both invited to get an update here on the storm damage. Maybe they'll break bread. I don't know. But he's got Elon Musk covering him in Butler this weekend. So Donald Trump's keeping company with some interesting folks.
Well, I mean, this news on the dock workers, Joe, I mean, I guess if you're President Biden and you want to, or Kamala Harris, and you want to wave that around, that's got to be a net positive on the margin.
For sure. As I mentioned, though, they still have to work out the automation component. But yeah, they just took a big problem off the table, at least between now and November. And Kamala Harris, interesting, they each kicked out their own statements last night. You see that? It wasn't just from the White House. You got one from Joe, one from Kamala. They essentially said the same thing. She's calling for fairness and acknowledging the power, as they say, of collective bargaining. But that's not something that she wanted to answer to between now and November. And it could have, as you well know, caused a massive economic interruption. That doesn't help the price of oil, though, guys, which brings us back to this story in the Middle East.
I mean, Joe, I mean, he's got a clock embedded in his neck. You know, he got surgery done at Mass General.
You have one of those, too, I think.
You know, it's October 4, which I'm going to say is 31 days to joy. What's the breathlessness of the two campaigns right now?
The breathlessness
the immediacy,
is really
the shortness of it all.
Look, I think that normally we'd be gearing up for another debate right now. I've heard you talk about this gap between the vice presidential debate and actual election day. That's real, which gives these campaigns a little more time, I guess, to spend money and get ready for closing arguments. But I'll remind you, people are already voting. And that's what matters right now, including the two states that were ravaged by this storm. And I wonder what that means for turnout.
Yeah, I talked to Mike McKee, Joe Mathieu, and we both decided we're so permanently scarred from 1986 that we can't get it on for the Amazons. Were you able to watch the Alonso home run last night?
I still have my 1986 bumper sticker on my guitar case, Tom, which is something that someday I hope I get a chance to show you.
That would be good. Joe Mathieu, thank you so much. I can't say good morning 92.9 FM in Boston. I can't say enough, folks, for you nationwide, how genetically impossible, Paul. You know, Derek Jeter, the Yankees, I get it. It's impossible. Good morning, Lenny Dykstra. It's impossible, Paul, to root for the Mets. I just can't get
Can't
there.
do it. Well, 86 scarred you guys, understandably so. But I mean, for the Met fans, this is really a pleasant surprise. So they're there, and it's one thing for this team. They've got a tremendous amount of resilience. They just keep popping back all the time. So
Joe Mathieu, thank you so much. Balance of Power. Look for that starting at 12 noon today. The Mathieu Lines Hour, as they say. Jobs Day, 32 minutes.
I know.
I can't remember an uncertainty. And the wonderful Zero Hedge exposition off of Goldman Sachs and JP Morgan yesterday, there's a fan distribution of outcomes, Paul.
Yeah.
Get a dartboard out.
No, I mean, WHIS, that's the whisper number. We're now at 152,000 is the whisper number. Yeah, and it's got a great little chart, shows you how that number's changed over the last month or so. And just starting October 1st, we were at 130,000. So just in the last few days, the numbers come up pretty substantially here. Maybe that ADP print helped out a little bit, giving people some bullishness for the jobs number.
Thank you, Joe Mathieu, on Eastern Mediterranean Brief. And you see it in oil, Brent crude, global oil, $78.74. That's up $1.12. That's up a solid $8, I'll say.
Yes.
Since all of this began 4, 5, 6 days ago. West Texas up 1.6%, 74.85 as well. Dollar churning, but all in all, dollar strength. Euro dollar from a 111 down to 110.32 as well. Mr. Ray Vaughn, In Step, Crossfire, best second song on an album ever.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mathieu. It is Jobs Day. Paul Sweeney steeled watching the 2-year yield to see what the weather vane does here. Coming off that jobs report, 2-year yield now, Paul, 3.74%. Yields are elevated here off the assumption of a better number.
Yeah, exactly. So when we look at the 2 years, you mentioned, Tom, up 3 basis points, 3.73%. The 10-year also up a couple of basis points, 3.86%. So we got 13, 14 basis points of steepening between the 2s and 10s, Tom.
Have to see. We're going to do some equity market review here. Scott Cronin to join us, Cam Dawson on deck. Liz Ann Saunders will join us, I believe, in the 9 o'clock hour as well. Bloomberg Surveillance, it's Jobs Day. We're brought to you by Cohn-Resnick Advisory, Assurance Tax Discover, optimization strategies that are helping CFOs make their finance function more competitive and resilient. Talk to Cohn-Resnick's advisors. We thank Cohn-Resnick each and every day, and particularly on a Jobs Day as well. We need to frame out the market here before a good conversation on the equity markets from the Interactive Broker Studios, our Bloomberg Business Flash. Lisa Mathieu.
And we got futures posting modest gains ahead of today's jobs data. It's going to offer some clues on where interest rates are headed right now. We'll check in with NASDAQ futures up 0.3%, 75 points, 20,065. We have Dow futures up 0.1% at 42,390. S&P futures up 0.2% at 5,764. The 2-year yield 3.74%, up 3 basis points. The yield on the 10-year 3.87%, and that's up 2 basis points. To commodities, oil set for the biggest weekly gain since early 2023. Of course, that's due to further escalation in the Middle East. Right now, we have Brent crude up more than 1% at $78 a barrel. WTI crude up at $74 a barrel. Shares of Spirit Airlines, they are tanking this morning. Right now, they are down 34%, and that's after that setback, efforts to restructure its debt, avoid filing for bankruptcy. Sources saying that the months-long negotiations with bondholders, well, that's just failing to reach a deal. And more advances in Google's AI-driven makeover. The company pumping up the search engine technology. It's going to allow users to voice questions about images, also organize an entire page of results. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks for that. Paul, have you ever flown Spirit?
No, and
they're yellow.
Yes, they're the yellow ones. You can't miss them. But I mean,
Lisa, please.
Oh, I did. Yes, the tray tables are very tiny. It was about the size of my phone, but it was, we were headed a quick flight, and it was good for that quick flight in and out. Low cost.
Okay.
It's like people's distress.
But yeah.
Back in the day.
Lisa doesn't understand.
They did not allow that merger to go through, and this is what you get.
And that's
what
happens.
I mean, thank you, regulators.
We got a Jobs Day in 26 minutes.
Yep.
All everybody wants to know is what to do with Sweeney's 501k.
Sure.
Cam Dawson here right now. Thrilled that she could be with us with New Edge Wealth. Looking at the equity markets away from the hysteria of one jobs report. I want to take this, folks. It's the weekend. You got the beverage of your choice in your hand, and you're talking with whoever in your fam about 2025. Where are we going to be in 2027? Cam, can you go out that far? Or do you have is your long-term perspective 2 weeks?
Look, all the way to 2027, I think a lot can happen. One of the interesting things when we think about the long term is typically when you see valuations as high as they are today, positioning as stretched as it is today, it is usually consistent with lower forward returns, meaning that you don't have the double the average long-term returns like we've seen over the last decade. The challenge is there's a lot of different ways to get to lower forward returns. You could have a big rally and then a crash. You could have a correction.
Well, Yardeni
or you could go sideways.
Yardeni, Paul, reaffirmed this yesterday. Dow 60,000, XPX 8,000, because he has a courage like Cam Dawson to go out farther than 3 weeks.
So, Cam, what are you looking for as potentially the next catalyst here? Is it economic data like a jobs number? Is it earnings, like we actually go back to real earnings? What do you look for?
I think it is earnings that matters most because that has been the key underpinning of this rally. The fact that the 12-month forward earnings number has continued to rise just allows you to shake off bad headlines and uncertainty. If we think about the jobs number today, I don't think that a bad number will be taken well by this market, because effectively the Fed is telling you it's going to cut rates even if we get a good number, meaning that even if we get a good number, they still want to get to neutral. They are hyper-focused on neutral. So the probabilities are skewed to the downside if you come in under expectations for today, which could just be a source of shorter-term volatility.
So, I mean, if earnings do matter, I guess valuation matters then as well. How do you think about valuation? Do you need to do some work to get comfortable with valuation?
I think you do have to do some work to get comfortable with valuation, in the sense that you have to question, are we in a new paradigm? Because the only way you can argue that there's upside to valuations is if you happen to believe that this time is different and we're in a new paradigm. But history has told us multiple times, every time that narrative takes hold, it is wrong. So that's why we continue to want to have valuation discipline when we're finding names to own, simply because you are having to pay up so much for this market.
Okay, A, I can't spell paradigm, and B, I can't spell NVIDIA. Are you saying sell the Mag 7?
There's a G somewhere in there. The Mag 7, some of the names aren't as stretched in valuation as you might expect.
Such as?
Well, if you look at names like Google, they've certainly seen some derating, that there are high-quality names within the Mag 7 that don't have ultra-stretched valuations. The challenge is, in aggregate, this market is stretched at 21.5 times forward. The only
SPX is at 21.5. I didn't know that.
And the only time it's traded higher than that was the pandemic peak during 2020, when earnings were depressed and you were flooding the market with liquidity.
Paul, who booked her? I've never seen her this cautious.
So, Kim, I mean, it's interesting. One of the issues that people have to get comfortable with is leadership. Who's going to lead this market higher? I mean, do I play that rotation trade out of some of these big tech into some of these other sectors, maybe even small and mid cap? How do you think about leadership in this market?
We've certainly seen tech give up some leadership, and we think the key level to watch is it needs to get above its September high. Otherwise, it's in a bit of a downtrend. If you look at the other parts of the market, healthcare, financials, materials, they're all looking a little bit sketchy. But what is looking better is energy and industrials. So there's a little bit of that cyclical value bid that's going on in this market.
With your gloom, this is Dawson Gloom. I'm busting her chops. Kim Dawson, what does a mere mortal do? Do they hedge intelligently? Do they build cash? Do they literally sell stuff, given your caution?
Well, look, I think that the caution comes from the idea that we are just in a seasonal period of higher volatility, but that we have to be ready, willing, and able to buy into weakness, that volatility should be seen as opportunity, not necessarily as risk. And so that way we continue to find opportunities within this market of high-quality names that go on sale, but we can't just close our eyes.
You're begging for a correction, 10% correction. It's not happening. I got the Eastern Mediterranean. I got an election that's nip and tuck either way. I got this. I got the Mets playing the Phillies. I mean, it's all there. I mean, if we can't get a correction out of this mess, when are we going to get one?
I think that it all comes back to earnings. And the key watch item for us in 2025 is if that earnings number starts to level out, returns in the equity market will start to level out. The market will look a lot more like a 2015 or a 2018, where we chop sideways. It's not enough to say, get out of the market and sell your equities. It's just to say, maybe lower your standards for what returns can be given such powerful years in 23 and 24.
I can go in fixed income. I'm making money across the board in fixed income this year. How are you playing that?
We do think that there's short-term upside to yields, which we think allows us to have the opportunity to extend duration if yields do pop higher. We're right at an important point where if we break above the 50-day and the 10-year, that we could get up as high as 4.1% in the 10-year. That would be a buying opportunity in our view. The thing that has us a little bit cautious on some of the riskier part of the credit market is just that spreads are so very tight and priced for perfection. CLO spreads, AAA spreads are at the tightest they've been in years. years. You look at high yield spreads making new year-to-date lows. That just tells you you're not really being well compensated for credit risk at this time.
Kim Dawson, thank you so much. Greatly appreciate it. Come back when you're more optimistic. This is amazing. Kim Dawson, thank you. She's been dead on about participating in the market. We're participating now with futures, up 13. On this Jobs Day, 19 minutes away with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Israel carried out huge bombing raids near Beirut airport overnight, targeting Hezbollah leaders and facilities. The U.S. and its allies are warning of an uncontrollable escalation in the Middle East. Bloomberg's Joe Mathieu reports it's been difficult for the Biden administration to control events the last several months.
There are a lot of doubts right now about the level of influence that the administration, that the U.S. government has on what's happening in Israel. I mean, my goodness, we've been through this over and over, to your point, week after week, calls for restraint, and yet we see continued escalation. And it's not just Joe Biden. Anthony Blinken's made 10 trips since October 7. And yeah, we're going to have an anniversary to mark the first year here on Monday, which will not be lost on us. And we'll be watching very closely this weekend to see what happens. You know, the Jewish calendar plays into this as well.
Bloomberg's Joe Mathieu in Washington. The search for victims of Hurricane Helene is dragging into its second week. With at least 215 dead, lack of phone service and electricity continue to hinder efforts to contact those who are unaccounted for. President Biden got a first-hand look at damage in Ray City, Georgia.
Before Helene had made landfall, I also immediately improved emergency declarations your governor and others asked for. And so all of us could focus on the first responders and standing up emergency operations centers. That was the focus.
The president also toured affected areas in Florida. Donald Trump is heading to Georgia today to appear with Governor Brian Kemp, the latest sign that he's patched up his rocky relationship. Later in the day, the former president is holding a campaign event in North Carolina. Meanwhile, Vice President Harris is visiting the union stronghold of Flint, Michigan today. The union representing striking U.S. dock workers at East and Gulf Coast ports has reached a deal to suspend a 3-day strike until January 15th to provide time to negotiate a new contract. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. It's the best time of years for sports. It's the absolute
Football,
best.
Baseball, it's all
But the
there
British
for you.
thing, I mean, Ira Jersey on Aston Villa and all that, I have no idea what he was talking about.
There you go.
But it's like the greatest thing. And now the pitchers, am I right, Michael Barr? The pitchers get to rest now for
Yes.
a number of days.
Yes, at least, because the Mets are going to be on the least rest because they had to carry on.
Okay, keep the mo.
Yeah, but it's fine now. So they got the rest. Skubal's going to be fine when he shows up. No, I'm sorry, I slipped that in there. So, but that rest is going to help, and now they're going to play their divisional series in their respective.
I can't
AL
remember the last
and
time the Yankees played. I mean, this is like a week or more than that.
Yeah, well, you wonder, do you get too much rest?
I know, that's what I'm worried about. Yep.
I mean, I guess you work out and you keep sharp and all that. It's like when Bard takes 3 or 4 days off. He does the national news at home.
Exactly. In his bathrobe.
Sits on the couch. Mrs. Barr's going, how about those 49ers? And he's going, in the Eastern Mediterranean. Michael Barr, thanks so much. We'll try to look at some other sports here. We'll do that after the jobs report in 18 minutes. Paul, are we lucky or what? Ellen Zentner and Claudia Sahm.
I know.
Together.
Back to back.
This is some serious academic
Firepower.
jobs. Zentner acclaimed on the American consumer and Sahm on her academic economics. It is Jobs Day. Stay with us. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mathieu. We've got green on the screen with less than 15 minutes to go before the jobs numbers are released. Right now, we have NASDAQ futures up 0.3% at 20,066. We have Dow futures up 0.1%, 42,384, and S&P futures up 0.2% at 5,765. The two-year yield 3.72%, up 1 basis point. The yield on the 10-year 3.86%, and that's up 1 basis point. Shares of EV maker Rivian down more than 8%. The company cut production guidance for the full year. They said it was due to a supply shortage. And sticking with EVs, we'll go to Alphabet's Waymo. They're expanding its robo-taxi fleet with electric vehicles from Hyundai. They're going to be built in the U.S. And meanwhile, sources saying Hyundai seeking a valuation of $19 billion for the IPO of its India unit. Could be the nation's biggest share sale. And finally, sources saying EU, it's voted to impose tariffs as high as 45% on electric vehicles from China. Germany, 4 others voted against the proposal. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Lisa Mathieu. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Futures up 16. We're now 12 minutes away from the jobs report. We're going to have Claudia Sahm with us. Ellen Zentner will join us later. Liz Ann Saunders as well. Right now, Scott Cronert, Citigroup, joins us as well. Scott, how does an equity beast like you handle a jobs report?
You know, well, I tried to put it in context, Tom. I mean, I get the short-term reactions to it. What's more important to me is the underlying trend and condition. And so, you know, I get it. Consensus is where consensus is, around 150. Our economists are looking for a number lower than that. I think the focus here from my perch on this particular data point is that headed into Q4, our view has been that we mostly expect that the S&P is fairly valued, and we expect a flattish lock-it-in end of the year. And what is going on here under the surface is that you get a number of potential volatility events that starts with today's employment data, and then you go into the Q3 reporting period. You got the election in early November, and you see how this plays, right? So the today's employment number is one part of what I think is a bigger picture.
So Paul Sweeney, is Scott Cronert saying go to the triple leveraged all cash fund until November 6th?
I don't think Citi would ever say that. But Scott, talk to us about earnings here. You know, they matter to an old equity analyst like myself. They matter. What are you looking for, and what are clients telling you?
Yeah, so I think, you know, I think what we're looking for is a repeat of what we got with the Q2 reporting period, which we're going to call a beat and hold, right? So we expect earnings to come in okay. Consensus is for flattish Q3. We think we'll do a little bit better than that. But we think the way the economic conditions unfolding, again, with the jobs data today is an example of that corporates are going to be very reticent to be really exuberant on their outlook. So we're expecting that Q4 estimates probably hold, if not come in a little bit. And all told, I think the consensus look for S&P earnings around 242.43 this year probably has a little bit of upside, but you know, not significant. Now, in terms of what investors are looking at here, I think there's an ongoing open question mark. I think there's a buy-in to the broadening thesis that we've been talking about for some time that should play into 2025. Both from a performance perspective as well as from a fundamental perspective. But again, timing of this is interesting as we're just getting going on a less restrictive Fed regime.
So, Scott, I'm looking. Bloomberg has a Mag 7 index. Of course, we do. It's off about 6-7% from its July high. What does that tell you? I mean, you get on the phone with your clients. I can't imagine people are really selling Nvidia or Amazon or Apple, those things.
You don't sell those. I don't. In our opinion, you don't sell those names. The expected growth is still off the charts. Nvidia is projected to grow next year. Earnings roughly 40%. The rest of the Mag 7 somewhere around 20%. That's versus the other 493 that's still trying to find expectation bottom for 2025. So I think there's where the narrative is shifted, Paul, is that in the first half of the year, you couldn't have a conversation without it being dominated by the Mag 7 discussion because of the weighting effect and the performance attributes that were causing investors to really, really have to focus on how to position. As we've turned into the middle part of the year and now towards the tail end, the performance has faded at the margin. We saw the Q3 performance was, let's call it uninspiring versus the first half. So the discussion's now shifting. So I think there's an acknowledgement that you have to own some component of the Mag 7, but I think it's what else can we do from this point to navigate an ongoing Fed narrative, an ongoing economic and geopolitical narrative. So the whole discussion is getting much broader now.
So if I want to go broader, where do I go? What are some of the sectors that kind of screen well for you guys and your team?
Well, so what we've been doing is arguing that you want to have a balance of growth and cyclicals, and so going into Q4, so a week ago we upgraded consumer communication services, which does get us back into that internet component.
Yep.
We suggested pairing off tech. We went overweight semis and underweight software. So that's an example of how we think about playing this into the end of the year. More importantly, though, we continue constructive on financials, and we continue constructive on consumer discretionary. We threw a contrarian overweight into energy, which is actually from our perch pretty attractively valued going into Q4. Obviously, geopolitics supporting that right now.
Scott, thank you. Got to run to a jobs report. Scott Cronin was Citigroup with us this morning. Ellen Zentner will be with us a bit after the jobs report. We're thrilled to bring you now, and lovely that she's with us. Claudia Sahm is with us this morning, Chief Economist, New Century Advisors, and without question, the most influential economist in America over the last 12 months. Claudia, I don't even want to get into the recession derby. You're like a piñata on that, Claudia. I just want to avoid it as well. Where do you see real GDP now? And it just tells me maybe we're not fully employed, but it's a solid economy. Is that right?
I agree. There's a lot of good in this economy, and absolutely the encouraging news on GDP growth and the upward revisions to income growth, right? This has more legs to it than maybe we even thought a week or two ago. So that's absolutely good news. And yet there's a lot that goes on in terms of how much output we produce. We could be having productivity under the hood that really has staying power, and that doesn't negate from the fact that, hey, there's some weakness and some cooling off in the labor market. So there's no one metric to look at and say, check, things are good, let's move along.
A lot of the mail I get, hate notes, and it goes to a single sentence, Dr. Sahm, in your note. It's hard to square with hiring rates at 3.3% in August that fell back to their level in 2013. A lot of our listeners and viewers agree with that tone. Is a labor economy worse than published?
There's a lot of tension. Like, I could flip it around and do the same thing and say the layoff rate near all-time lows, right? That's excellent. So that tension, that means there is a puzzle to resolve. Those two things don't fit together. I think one explanation for this is we've had a lot of uncertainty about what comes ahead. We know from business surveys that in times of hardship, businesses, the first lever they pull to pull back is on their hiring, right? They're really reluctant to get into that firing phase. So it could be that we've just had, is the Fed going to cut? How much and when? And what's the election? And are we in a recession or not? We've had a lot of uncertainty coming at businesses and families for that matter. And it may just be that that's part of that tension, and as some of that uncertainty resolves, and we're starting to see some of that, well, then that could move us back into a labor market that looks much more like the stronger the low layoffs, the job gains, and we're just through a rough patch here.
Claudia, a lot of folks are saying this might be the last clean labor report we get for a couple of months, given some hurricanes and strikes and so on and so forth. Does this labor report get more weighting by the Fed, do you think, than maybe a typical month?
I don't think so. The labor reports always loom very large, even in pretty boring times to the outside world. I mean, this is one of the pillars of the dual mandate is with employment. So like I said, there's not going to be, if you don't like what you see today, it's going to be hard to pin it on something, right? In terms of a hurricane or a one-off or some, quote unquote, transitory event. And at the same time, if we get a good number, it's one number. So, every data release, particularly the employment report, has a wealth of information, but it's not going to be decisive.
Claudia Sahm with us. She will continue with us, and after the jobs report as well. Lisa Mathieu will bring us the data here, then Ellen Zentner along Liz Ann Saunders in the 9 o'clock hour. We welcome all of you worldwide on Apple CarPlay, Android Auto. Good morning, 99.1 FM Washington, 92.9 FM Boston, Bloomberg 1130 in New York as well. On YouTube, please subscribe to Bloomberg Podcasts. Just thrilled with what we see out there, the intelligence of the live chat as well. Paul, I look at this, futures up 17.
Yep.
Paul Sweeney, you mentioned the whisper number migrates higher.
It's been a migrating higher time just over the last week from about 130,000 now up to about 151,000. So we'll keep an eye on that. So, Claudia, if I look at just some of the headline consensus, Claudia dropped, we'll get her back, but then just a moment. I understand, Rich. Thank you very much. And so here we are, Tom. We got the just the headline numbers: unemployment rate 4.2%, average hourly earnings hourly earnings up 3.8%. That seems pretty solid, I think, for this economy. You've got inflation below that, so you got real wages for most of these workers out there growing.
To improve.
Yeah,
and it's a very mixed thing. And I want to set up the polarity here, folks. And I'm going to shout out Stephanie Roth at Wolf Investments with a clearly glass half full labor economy. Paul, why don't you go back to Dr. Sahm here, 2 minutes away. Get one more question in.
Claudia, the headline numbers Tom and I were just talking about, 4.2% unemployment, 3.8% wage growth. That sounds pretty solid for me. Is that solid for the average U.S. consumer?
Those are good numbers if we stay there. Again, all of the concern has been about the direction. The unemployment rate has been going up. The wage growth is moderated. Those are good numbers. We're happy with those. But it's not the number. It's where we're headed. So if we start leveling out there, great news.
Claudia, where does immigration fit into this? Do you have any more clarity on that? Academic papers that give us a view?
We do have more workers coming in. We have the more we call labor supply. That's really consistent also with us getting surprised by these big growth numbers. We have more workers, more people we're producing. It is showing up probably in the unemployment rate and pushing things up, but it's also showing up out there in workers and producing. So again, this is an ingredient to the good news story. It's not the only one. We've had workers come in from other, off the sidelines, but it's really important we have this growing labor force.
What do you see on temporary versus full-time? I used to make that a cottage industry, but I haven't looked recently.
Yeah, that one's been really hard to read. And go back and underscore, we have seen patterns in this entire 4.5-year cycle that have been very unusual. We had a really rapid increase in full-time employment during the labor shortages. Yeah. And then the part-time come back. So I still think there's a lot we see even towards the end of 2024 that reflects back to what happened at the beginning of 2020.
Do you see how happy she is?
Yep.
Dr. Sahm is happy because we haven't asked her silly recession questions. That's why. Maybe she'll come back after the jobs report. Again, we welcome all of you across the nation for this hugely anticipated jobs economy. Paul, would you agree with me that the major theme up and down has been the idea that this report is a clearer picture than maybe going into the year end?
Yeah, I think so, Tom. I mean, this will be a clear picture of how the labor market is right at this point in time here, and give the Fed something to think about, presumably.
I like the underemployment rate. The previous number, 7.9%. We'll have to see where that number comes in. Again, we'll look at the revisions as well. They come out a little bit afterwards. Ellen Zentner got the revisions like 3 days ago. She already knows what those are. We're going to go to Dr. Sahm here, and then we will go to Ellen Zentner of Morgan Stanley, and that'll be a joy as well. From New York City across this nation, we look at the American labor economy. Paul Sweeney saying the whisper number has lifted. Let us look now.
This is breaking news from Bloomberg.
Wow, and taking a look at the numbers of the change in non-farm payrolls, the survey was for 150,000. It comes in at 254,000. That's just crazy. The prior was 142,000. That actually got revised up to 159,000. Want to look at the unemployment rate. So the survey, 4.2%, came in at under 4.1%. The prior was for 4.2%. Now let's look at the market reaction. So we have NASDAQ futures now up 0.6%, 127 points. Dow futures still up about 0.3%, 134 points. S&P futures up 0.4%, about 28 points. So I know, Tom, you like to get the revise, do the subtractions, break out the calculator. What do you have for me?
Lisa, Mathieu, thank you so much. I can't say enough, folks. I was drilled into you with chalk being thrown in the classroom over what's called the standard error of this statistical derby. Alan Zentner will be with us in a moment with Morgan Stanley. Claudia Sahm with us now, who learned that in the crucible of University of Michigan economics. Claudia, you nailed it by saying, there's some optimism here to see, but just across the board, it's morning in America. Why do so many people not feel that way?
Right. Well, first, it's take a deep breath, right? It's good to have, we've had some really not encouraging jobs reports in a row, and this is a good one. I mean, on the surface, you always got to dig down deeper. We're not all going to feel the same way about this economy or this labor market. We have hundreds of millions of workers who have very different circumstances. There still are people out there looking for jobs that aren't finding them. They're not going to be upbeat and positive about this. And for many things, whether it's inflation or unemployment, this has been a really rough ride. So being told from a statistic that's very abstract, just some number that pops up on the screen that you should be happy, is not,
right.
These are feelings, not the numbers. But this is encouraging. And this, we need more of these, right? Because we've had some disappointing ones, but this is in the right direction.
10-year real yield up 8 basis points. We've gone from a 156 to a 1.72 in 2 or 3 days as well. The Sweeney yield explodes out up 16 basis points. All you need to know is the word ginormous, 3.87%. Paul Sweeney, the 10-year yield, we're going to get to a 3.95%.
Yeah, big moves in the yield space, Tom. So, Claudia, just the headline numbers for the people that care. Unemployment rate, 4.1%. That's down from 4.2%. Average hourly earnings up 4% on a year-on-year basis versus 3.8%, actually revised up to 3.9%. So, I mean, the headline numbers for a lot of folks out there, pretty solid here.
Yeah, no, these are good numbers. This is a good report, So, I'm not. Again,
is
I'm
the
sure
Fed is the Fed gonna read it that way?
Well, I think the Fed also smiled when they looked at this one, because the inflation is coming down. That is part of getting back to 2%. We're well on our way. Unemployment is low, the maximum employment, that's the other side, and then they should be out of the way. The Fed has interest rates. They are still high. You can look at interest rate sensitive sectors, and the Fed still is having an effect. It is not, their job is just to kind of keep things together. They're not supposed to be trying to push the economy one way or the other in just normal times. So the closer they get to checking both boxes on the dual mandate, great.
Dr. Sahm, thank you so much. We're going to leave it there. Really, really appreciate it. Claudia Sahm with us this morning with all her good work for economics that we've seen this year. Our economic indicators of the futures up 27, big lift to the market. Our economic indicators always brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about our consultative support, their technology as well. Again, futures up 24, Dow futures up 100. VIX was a 20 level off Eastern Mediterranean angst into 19.51. Gold 2663. Gold actually comes in a solid $15 as well. Really interesting jobs report and a good time to speak with Ellen Zentner, Chief Economic Strategist, Global Head of Thematic Macro Investing, Morgan Stanley, their global investment audience. Ellen, thank you so much for being with us. This is a solid economy. Bring this right over to real GDP.
Yeah,
Are we 3-ish forward?
It's still 2 and change. Yeah, it's still 2 and change. I mean, if you look at this report, it's on the back of these phenomenal upward revisions last week to gross domestic income.
Yeah, Claudia mentioned that as well.
Stronger consumer spending and income growth and a higher savings rate. So we didn't even have to draw down the savings buffer in order to get that stronger spending. And where are we spending? We're spending on services. Where was the rebound in this report? In services. I think the decline in manufacturing jobs is something to keep an eye on. But this was a big rebound in services, and the services side of the economy is still strong.
Ellen, how do you think our Federal Reserve is going to view this data point here today?
Well, favorably.
Yep.
It's look, there's ample room to cut, to use Chair Powell's own word. And so given that, the bar is not particularly high to go 50 basis points if the data warrant. This is not data that warrant it. Do people care about this report? I've heard that a lot from people because the next employment report released during blackout is going to matter. It can help them make a game time decision. But so far, the data flow does not. It supports Powell's baseline, which he laid out earlier this week with pretty much 25s.
And a red headline just coming across the Bloomberg terminal: traders shred bets on 50 basis point cut in November after jobs data. So maybe leaning a little bit more towards 25 here. What does this say about the U.S. economy? Because as Tom was mentioning before, you get numbers like this, and it kind of goes to a lot of folks out there who are concerned about the U.S. economy, that maybe it's a little bit stronger than we think. How do you guys think about the economy overall?
Well, look, I think this is always the case, right? We get this restatement in data, whether it's just the 2-month, net upward revisions in this report, or all of those benchmark revisions that came last week. Oftentimes these revisions can suddenly make us realize that we're sitting on an economy that is different from what we thought before. The foundation is stronger. Now, that doesn't mean that the risks are to the upside versus the downside. I think that the higher we run, the greater the risk is to the downside when companies do shift and decide they don't want the higher anymore.
Ellen Zentner with us with Morgan Stanley, so she could be with us, Morgan Stanley Global Investment Office. We welcome all of you across the country. Since Lisa Mathieu gave us the numbers, there is a bid to the market. Futures up 24, now up 33, up 0.6%. NASDAQ up 0.9%. Small caps up over a stick right now. The VIX comes in solid in a big figure, 19.19 on the VIX. And yes, there is dollar strength as well. Ellen, I got to go to a bigger, broader picture here about the unknown unknowns. You've been exquisite at this for years out of Texas. And the basic idea is there's a productivity mystery, there's an immigration, migration overlay. Yes, all wrapped up in the election. Do we have any confidence within our traditional models now as we see a 254 plus revision?
So here's what makes forecasting payrolls really difficult: when firms aren't laying off. When there's a lot of volatility in jobless claims and you can see them rising and falling, it translates well into modeling employment growth. When jobless claims are just sort of low and steady, you're trying to simply model the rate of hiring, and that's much more difficult. And also, Tom, 200,000 is one standard deviation on the payroll report. So I can tell you at more than 250,000 in today's print, I'm pretty confident it was positive this month.
You mentioned some new revisions to GDP, higher corporate income, muted labor share. This got to be good for just overall profits in the marketplace.
Productivity drives profits. This is a productivity story because you pair those revisions upward in growth in the economy to what we know is going to be a downward revision to employment when we do get those benchmark revisions. That's stronger productivity, and productivity drives profits. And it explains how margins are holding up well. It explains the earnings surprises. It brings, in a bizarre turn of events, it's bringing the economy to the markets.
Interesting.
Hey, Paul, I just did the math. Here we are. You can see this on YouTube. On radio, I'm holding up the famed HP12C. The only reason Ellen Zentner first talked to me a zillion years ago was I showed her my HP12C. And here's the answer.
Impressive.
The 3-month moving average, Paul, went from 116,000 to 185,000 with 254,000 plus a solid revision of 95,000. I mean, I'm sorry, revision's got the wind going here.
Yeah. So, I mean, Ellen,
185,000.
That gets your attention there, and the HP12C cranking along still. I got mine June 16th, 1986.
I have my HP graphing calculator.
Oh, that's geek. That's serious geek there.
Did you ever have a Monroe Trader?
No.
I mean, you go darken Jim Caron's door at Morgan Stanley. He'll explain the glory of a Monroe Trader. Paul?
Yeah, but now we've got the Bloomberg terminal. Macro investing. When you see a print like this, when you see an exceptional U.S. economy like this, how does that how does that influence Morgan Stanley's view of the global macro investing here?
Well, I think that, there are a litany of risks out there from the global economy. The U.S. exceptionalism, right? Dollar strength.
Yep.
The weaker the global economy is, the more you're going to drive investments to dollar-backed assets. We talk about trade and uncertainty around trade. Everyone thinks that that's going to be a weaker dollar under a Trump presidency. That's a stronger dollar. All you have to do is look what happened in 2019.
DXY out to 102 right now. Euro goes under 110. Weaker euro 109.83. You pay through the nose in Dublin. I'm in Rome. It's gonna be perfect in Rome.
I know.
I'm gonna walk by Gucci and Balmain, and there'll be a store down via what's-its-name where they'll take my wallet with a weaker euro. Ellen Zentner, I want you to tell us about your new duties at Morgan Stanley with Morgan Stanley Global Investment Office. What are you doing now?
I thought maybe you would run out of breath listing out my title.
Well, they had to give you a big title.
It's lengthy.
Consultant. Yes.
It's really lengthy.
Right. Does that mean you're doing less?
I wish. I have really enjoyed being a part of the Global Investment Committee now for Morgan Stanley. Right. It's important to have a macro voice that can talk to longer run thematic trends, that can talk to dynamics around productivity and growth and how companies hire, and trying to close that gap between understanding markets and the economy.
I mean, within that, let's go right to productivity. We've got capital dynamics, labor dynamics, and I'm sorry, it's a huge mystery in our modern total factor productivity. Is it just a polarization of America into the haves of productivity and the have-nots?
Well, total factor productivity, which is the productivity from technological enhancements, that is the most difficult piece of productivity to measure. And it's one reason why when I was moderating Chair Powell earlier this week, I was trying to see how he felt about those revisions that GDP and GDI are up, but employment is going to be revised down, so that's greater productivity, and understand whether that is some sort of, post-COVID, normalization or distortion, or is it something AI? And you just can't say that it's technological advancements yet. I am in the camp of being very positive on what technological advancements from AI can bring us in terms of productivity. So I can tell you that productivity is much higher than we think right now. When we get that data, we'll see that. But I can't tell you that it's something that will be sustained.
I mean, Paul, as simple as this, if you got a run rate 2.8% real GDP, for the haves, is real GDP 3.5 or 4% China-like GDP, and for the have-nots, they're in recession. It's as simple as that.
Yeah, I don't know the answer to that. Yep.
Well, the have-nots have been in recession for some time. Gas prices coming down so much has helped buying power, but of course we'll see if this pop in oil prices is going to last, because about a 2-week lag it starts to show up in gasoline prices. And also lower interest rates from the Fed. Whether it's 25 or 50, interest rates are coming down. And while the market price is in the entire path of Fed easing, the rate you pay on your credit card moves as the Fed is cutting rates. And so with strong job gains, especially in the service sector and some of these other positives, you can put a floor under lower income households here.
I mean, Paul, what's so important here is Zentner's never talked much about she wins this trophy, this one, this prediction. She's like Steve Stanley over at Santander. They got all these awards
all the hardware,
on the fireplace in the second living room. Ellen, you won those trophies off a view of the consumer. What is the state of the American consumer with 254,000 jobs created?
Well, with this pop in services sector, right, this rebound in service sector jobs, we see that wage gains and job gains continue to be positive for lower income groups, but they are still battling with higher rates of food and housing inflation, and wage growth is strong, but it has been slow. But they're in better shape than they were. And then the wealthy households are just on fire.
Yep.
No slowdown there.
What is the Morgan Stanley GDP call these days?
So the economics team, my former team, is still looking north of 2% for GDP.
Are you on speaking terms with him?
Of course.
Okay,
Just checking.
Of course, my lovely team. Tom,
Morgan Stanley's brutal. Berner and Roach were not on speaking terms for like 15 years.
No.
Okay.
That U.S. economics team on the institutional security side of Morgan Stanley is number one, hands down.
Okay, we're going to digress here, Paul. And I don't want to keep. This is too important, folks. What we see with futures up 42.
Yep.
Steve Roach, with the backing of Morgan Stanley management, including Mr. Mack, invented heated debate. They're the first team I know that got off the "we are the world, we have one voice" malarkey, and they used to fight like cats and dogs. And Roach supported it. And that's the heritage that you've got.
Well, we don't need to fight like cats and dogs. We can be respectful debaters.
You haven't talked to Jim Caron.
You just like to stir the pot, Tom. You're a pot stirrer.
So, Ellen, just real quickly here, I mean, what's the next, I guess, data point that you and your team are going to be looking for here? Is it earnings coming up? Is there some economic data that you're looking for?
Yeah, I mean, earnings is always a great time to scour those transcripts and see if there's some early signs of something changing. I want to try to get a sense of how much of this activity is front-loading ahead of the election and possible tariffs and possible difficulty hiring for the holidays, and so you're doing a lot of things early here. So I want to be sure that earnings are really supporting what we're seeing in the economy.
One more question. Where are you fishing next?
Oh, gosh, I'm still fishing small stream, Pennsylvania.
Really?
Yeah. I haven't been able to make it out to big water west this year.
Describe small stream Pennsylvania. Like, I don't want to know the secret spot.
It's a 6.5-foot rod with just wrist flicks.
Is it sturgeon? What are you looking for?
Oh, no, trout.
Sturgeon.
You can't fit sturgeon in Pennsylvania, small stream fishing.
Really? I didn't
Tom,
know that.
you really don't know a lot about it, do you?
Wait, that's Ira Jersey's line. Ellen Zentner, thank you so much for being with us. I'm not going to name her title now. Mr. Peck, do something about her title. It's just way too gamely. Ellen Zentner, thematic. Yeah. Okay, one word, thematic. She's at Morgan Stanley's Global Investment Office. Ellen, thank you so much for being with us today. On this economics, and I'll give you a data check here in a moment, Bloomberg Surveillance, we're brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic indicators and climate indicators. Visit ibkr.com/forecast. Get started today. Thank you to Interactive Brokers, foundational support for all we do here at Bloomberg Surveillance. The VIX was at 20. We're now through 19, 1.57 big points, 18.92. Let me come down to oil, where I've got a 78.03. Oil ebbs back a little bit here. Of course, I don't know the time zone here. It's the late afternoon in Israel, in Lebanon, in Iran, so we'll have to see how that goes into their evening with all that horrific news. Thank you, Joe Mathieu, Balance of Power, for that Eastern Mediterranean brief. Futures up 25, Paul, now up 43, Dow up 200, NASDAQ up 1.1%. BitDog launches 61,000 on Bitcoin. I'm looking at the real yield again. It's pulled back a little bit, but up 5 basis points. What do you see on the screen, Paul? What are you looking at?
I think people are looking at this report, Tom, and saying, all right, this economy is in decent shape. It's in maybe stronger shape than we thought. The Fed is cutting rates, but maybe not 50 basis points in the next meeting, maybe a series of 25 basis point cuts. Yeah. And that's kind of what we're seeing in the market. But again, the 2-year up 15 basis points, Tom.
I'm going to go with Jason Furman, who I love his annualized work. He looks at 1 month annualized, which is, baloney, but he does it. 3 month annualized, which was my crutch for years. 6 month, 12-month annualized. 3 month average non-farm payrolls, Paul, went from 116 up to 185. Yeah, that's a wow statistic.
That's a wow statistic, and that shows the Fed that they've got this economy in a pretty decent shape.
Ira Jersey never believed in 50 basis points. He joins us now from Bloomberg Intelligence and fixed income. Okay, we're done with that silliness, Ira. What is the power of a measured 25 basis point path forward for Jerome Powell?
Well, I think, this data is going to take out any chance of 50s probably through the next two meetings at least, if not through January at least. And then after that, I think that this is where the 2-year yield being somewhat higher could be maintained, and that's where does the terminal rate go? Remember, we were pricing just a week ago for interest rates by the end of next year to be under 3% for the Fed funds rate. So that is starting to get repriced now. We're now around 3 1/8, and I suspect that might go a little higher, particularly if we get an inflation print that doesn't show that that inflation is moderating even further. So I think there is a risk here that this is the better scenario that we've been talking about. Like we never believed in the soft landing. It was either, hey, the economy's either going to chug along or we're going to fall in recession, and it seems like maybe that beginning one is where we're headed.
So the yield curve today, just Ira, flattening out a little bit. We get the 2-year up about 15, 16 basis points, and the 10-year up about 9 basis points. How do you think about the shape of the yield curve this day? What's that telling the average investor?
Well, I think that the knee-jerk reaction being a bear, what we call a bear flattening, so 2-year yields going up faster than 10-year yields is the quote unquote proper reaction to this, because a lot of people were in yield curve steepeners. They were long 2-year notes, 3-year notes, and then market weight or underweight the long end of the curve. And so this is going to be a little bit of an unwind of that, because that possibility that 2-year yields head down toward 3% is going to be tested here with the data that we get over the next couple of weeks. But I do think that eventually, when 2-year yields get back up toward, say, 4%, that then the next move might end up being a bear steepener. So meaning that 2-year yields maybe hover 4% plus or minus 25 basis points, but 10-year yields wind up moving up higher, maybe back up toward 4.5% to 5%. But that is predicated on this data being confirmed, right? So we need a strong retail sales number, inflation, like I said, that doesn't moderate quite as much. Those are the things that we'll need to see a more persistent move higher in rates.
What's the real yield dynamic off of this? As we mentioned, we got a 3-month moving average, non-farm payrolls popping from a 116 out to 185. I get it. It's a jump condition. But what does that do to what every businessman in the country wants to know, the 10-year real yield?
Yeah, so the real yield, as expressed by the TIPS market, by the Treasury Inflation Protected Securities market, is that's a bulk of this move. So TIPS are basically the way that we measure TIPS and the way that we try to determine fair value is in large part what is the policy rate going to be, and that's why you see a 10 basis point sell-off or so in the 5-year real yield as expressed by TIPS, because now there's, like I mentioned, a much lower possibility of larger rate cuts in the near term, and then also a higher terminal rate, right? So that's the idea that, hey, maybe the Fed's only going to cut to 4% now instead of cutting all the way down to 2 3/4.
Paul, my head is spinning. I don't know if it's a jobs report, the Mets one, or Aston Villa's destined on the continent. I don't know which.
I don't know where we go. Ira, what's next for your Treasury market here? I mean, this data point here was a big one. Where do we go from here?
Yeah, so it's going to be the retail sales and the CPI data are going to be the next big one. So when you look at the market sensitivity, it's really shifted over the last year, where it was, payrolls has always been the number one report that the Treasury market cared about. But CPI was the number that we cared about from 2021 until late last year. And that's now shifted to retail sales actually being the number 2 most important number to the market. And the reason for that is it's a sign of general health of the economy, is the consumer spending. So yeah, I think the retail sales report obviously is really going to be the next big number that the market's going to look at for how healthy is the economy.
Yeah, IRA keeps us employed. I mean, it used to be just simple. Jobs day, go home. Yep. And now I got CPI October 10.
Retail
and I'm looking for, I don't have it up here. I gotta learn how to. See, Paul's the one, folks, that really knows the terminal. I mean, I don't know what I'm doing here.
Ira, what's the latest on Real Central New Jersey? Give us 30 seconds there.
We got a big game. We're playing last year's champions on Sunday night. So we're fourth place right now and hoping to move up to second or third after Sunday.
Are you, where you live in New Jersey, are you Phillies or Mets?
Well, we're in the brackish area in central New Jersey, right in between the two. So about half and half. Now,
So
I grew
you're
up
Red
on Long
Sox.
Island. Well, I grew up on Long Island, so you can guess which team that I have the bias toward.
Ira Jersey, thank you for the time in publishing today. Look for that
Brackish area.
on the terminal out to Bloomberg Intelligence. Ira Jersey and his team publishing on this changed fixed income market. Paul, we still have a bid on the market. I want to make clear, with futures up 48, this is not pulling back.
No, it's not,
at
Tom.
this time.
No, it looks like a solid reaction here in the equity markets. The S&P up about 0.8%. The NASDAQ, Tom, up about 1.2%. So a little bit more move there in that interest rate sensitive NASDAQ.
What do you do? You dance. Huey, good morning.
And Sundays pass on by. I'll be working here forever, at least until I die. Damn if you do, damn if you don't. I'm supposed to get a raise next week, you know damn well I won't. Working for a living, working for a living, working for a living, living and working. I'm taking what they're giving, cause I'm working for a living.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mathieu on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mathieu. Jobs Day, extraordinary, and still here at 9001. A lift to the market. Futures up 48, now up 52. Dow futures up 273 points. NASDAQ up 1.3%. Paul, what's your key point on the data?
Looking at the yield curve, Tom, you got big movement in the two-year Treasury, up 15 basis points, 3.85. So that 50 basis point cut that market was thinking about, probably taking that 50 basis point cut for the next meeting off the table.
Joining Paul Sweeney in the 10 o'clock hour, Austin Goolsbee,
Exactly.
Federal Reserve Bank, Chicago.
How about that?
Will be with us, Austin Goolsbee, and that'll be a changed discussion after this jobs report. You probably get more out of Dr. Goolsbee at Booth than you will out of the propaganda of the Labor Department. He's an optimist. He's really a glass half full person. We're going to get to a really wonderful glass half full person, an optimist on the American economic experiment. Constance Hunter from EIU joining us here in a moment. Let's get right to it on YouTube across this nation on your Friday commute from the Interactive Broker Studios with our Bloomberg Business Flash. Lisa.
You got it. Futures still on the rise after that blowout jobs report showed non-farm payrolls rose by 254,000 in September, way above the 150,000 expected. The unemployment rate came in lower than forecast at 4.1%. Traders now cutting their bets on a 50 basis point cut in November by the Fed. We'll get to the NASDAQ futures first, up more than 1%, 253 points at 20,243. Dow futures up 0.6% at 42,589. S&P futures up about 0.8% at 5,799. We have the 2-year yield 3.86%. That's up 15 basis points. The 10-year yield 3.94%. That's up about 9 basis points. I want to check in with currency. We have the dollar stronger. Japanese yen weaker, down 1% at 148.74 against the dollar. Euro British pound weaker. Bitcoin up more than 1.5% at 61,000. Shipping stocks slumping. U.S. dock workers strike on hold. We have Maersk down about 5% in Germany. Zim Integrated Shipping down about 11%. And finally, Humana on track for its worst week since March of 2020. Wow. It announced it'll lose Medicare quality ratings on some plans. Its shares right now down about 0.2%, but its stock price plunged 22% on Tuesday and Wednesday alone. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Really want to mention dollar strength. You're out to 102 on DXY. We mentioned euro earlier, and I'm sorry I missed the yen move. It is titanic. Here this week, we're out to almost rounded up a $149 yen, a much weaker Japanese yen in 3 days as well. This is wonderful. She is the chief economist at the Economist Intelligence Unit. All in the industry say EIU, and the reason is they changed the world of economics in 1986. In 1986, the Economist and EIU came out with an index which, Paul, I'm sorry, in 2 Happy Meals changed economics, and that is the Big Mac Index of the EIU. Constance Hunter joins us now. You're going to be in London next week. Do you have to go to the Liverpool station with a team and they have McDonald's, Big Macs?
I think we're right by Charing Cross, so we might have to look for a McDonald's closer to the office.
Tell us about EIU. What's the value add right now? I mean, acclaimed. I've read every book they've ever published. What are you going to do as chief economist, EIU?
So at EIU, we cover 200 countries and we cover 6 industries. So we have a saying that the world is covered 65% by water. The rest is covered by the EIU.
Nice. Oh, what a branding concept.
A little branding.
Hey, Constance, you know, I saw you at CFR. The world was coming to an end, I'm going to say 7 months ago. I just got an adjusted 3-month moving average on non-farm payrolls from 116 out to 185 with revisions. Why?
Well, I think as Claudia, you had her on earlier, Claudia Sahm has been warning, right? The Sahm rule might not be indicating that the world is about to end. And we have this underlying strength. And look, I mean, the Fed move wasn't enough to change the jobs outlook for September, but I do think that this is an underlyingly strong economy. If you look at where we're going to probably print for third quarter, we're looking at 2.7 to 3.1%.
Goldman Sachs is 3 up, maybe up to 3.2.
Wow. Yeah. Okay. So it's looking very good, and we have productivity, and I think that's where we need to focus, right? We have had an extraordinary run of productivity, and the question is this the 90s redux, right? May the Fed only need to cut 100 basis points or 125 basis points instead of the full number of basis points they were expecting to get the economy to be on solid footing?
Can you see Lisa Mathieu with like the Olivia Newton-John 90s look? Gwen and Blondie and all that. We don't want to go back to the 90s. Continue.
Constance, I mean, there's something for everybody. I mean, this jobs number today, whether you're looking at the 254,000 non-farm payrolls, the unemployment rate down to 4.1%, average hourly earnings annualized up to 4%, that feels like a really strong labor market. Are these numbers really reflective of what's going on out there?
Well, that's a good question, and I haven't had time to delve into the part-time versus full-time, which I always get, the tweets that the people at me like, oh no, it's all part-time jobs, the economy's falling apart. And so, I think in some respects, if you want a part-time job, that it's great that we have a labor market that's flexible enough to allow you to have one. But if you want a part-time job because you're taking care of an elderly parent or you can't find childcare, right, that is not an ideal economy. So we really have to dig down into these numbers. And look, there's always going to be things to improve. There's always going to be parts of the economy that need attention, right? And so yes, like there's always going to be people that where we need to do more for, but by and large, this is a solid economy. And the question now is, are rates too high, right? Is the Fed still restrictive? And how much do they need to adjust and calibrate to be neutral? Like, does this jobs report allow them to be neutral? And I think, look, you don't want to take too much away from one print. You were right to look at the 6-month moving average, right? And it's solid.
Okay, people say to me, stop me on the street. How do you do it? How do you do this parlor game? And the answer, folks, is I stole this from John Micklethwaite years ago. You read a 14-page essay in the Economist magazine. I know you're writing a 14-pager right now on China. Constance Hunter on China. Go.
So I don't think the bazooka has very many bullets, or it has enough bullets, and that's because there's no way to really have enough bullets when you are in a balance sheet recession, which is what China is in. They have had a massive, massive adjustment to their property market. And just to calibrate this for you, in the US before the global financial crisis, residential real estate was 6% of our GDP. We recalibrated, it's 3% now, okay? China's was 25%. Okay, so think about the magnitude of this recalibration. It is going to take, and we did stimulus, right, coming out of the global financial crisis, and it still took us a decade, really, to get back. And I think what probably jolted us into place was all the stimulus from the pandemic, right? And so to think that China's going to get over this in like a year, that's insane. The question is, how many decades will it take? Now,
they don't on a labor model and on protest in the hinterlands, Chinese ambassador to the U.S., Nick Burns, was out in Chengdu this week by train. Out there by train, they don't have time for years to fix this, do they?
I mean, it will possibly strain the social fabric. You have high youth unemployment right now. That's
19%.
Well, it's hard to actually calibrate because they stopped publishing it.
Okay. What's that mean for the rest of the global economy? Don't we depend upon them to make stuff, to buy stuff, all that?
Well, yes. I mean, the U.S. economy is really a large closed economy in many respects. Trade, net trade is not a huge part of our GDP, and that's how we can be the reserve currency. We couldn't be the reserve currency if we were a small open economy because we wouldn't be able to withstand fluctuations in the dollar.
Good point.
Right? So, but Europe, we're looking to improve slightly, but that's from a very low base.
Okay. Please come back after you go to London and have the Big Mac at Liverpool Station to make the Big Mac Index go. I really want to talk to you about the Draghi model.
I would be happy to.
Mr. Macron with Stephanie Flanders this week. Macron was on fire.
I watched that interview. That was amazing. It was amazing.
But
yes,
I mean,
he did a great job, and she did a great job.
Fire about the drug. We haven't talked enough about the Draghi thing. Paul, I think it's you, me, Constance Hunter in Paris.
Yeah, we could do that.
I think that's must do radio.
Absolutely, Constance Hunter. Thank you so much.
Thank
you.
With
EIU, quickly here with futures up 48. Our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Trump plans to hold a rally tomorrow in Butler, Pennsylvania, at the same site where a gunman tried to take his life in July. He'll be joined by Elon Musk, who posted on X he'll be there in support. Bloomberg's Joe Mathieu has more from Washington.
I suppose he has every right to do so. He's helping to largely fund Donald Trump's ground game right now, $71 million through that super PAC. I just wonder, Nathan, we're cracking the seal on this now. Elon Musk, who's, of course, a very famous guy, and he doesn't mind being on stage and in front of people. Does he start speaking at these rallies? Will Donald Trump pull him up on the stage? I was kind of curious to see if we'd see that at the convention in Milwaukee, but we've got 5 weeks left to find out.
Bloomberg's Joe Mathieu in the nation's capital. Today, Trump is heading to Georgia and North Carolina. Vice President Kamala Harris is visiting the Union stronghold of Flint, Michigan today. Yesterday, former GOP Congresswoman Liz Cheney appeared at a Harris rally in Wisconsin.
I have never voted for a Democrat, but this year I am proudly casting my vote for Vice President Kamala Harris.
Meanwhile, Bruce Springsteen is offering his support to Harris, saying Trump doesn't understand what it means to be deeply American. Next week, Barack Obama is planning to blitz the battleground states supporting Harris. Next Thursday, Obama will be in Pennsylvania. A jury has reached a verdict in the trial of 3 former Memphis police officers in the death of Tyree Nichols in 2023. The convicted officers were found guilty on counts of witness tampering, and one was found guilty of civil rights violations. Ben Crump is one of the attorneys representing the Nichols family.
Tyree Nichols' death won't go unaccounted for. That is critical.
Nichols, who was 29, was brutally beaten during a traffic stop. He died from his injuries a few days later. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And Michael Barr, thanks so much. Paul Sweeney and Tom Keene after the jobs report. We're picking up the pieces here. Finally, the bid. Futures up 54, now up 47, so we'll see how that unfolds here in 16 minutes. Liz Ann Saunders to be with us in a moment. But we really thought, and Paul, you mentioned this to me, she's the one person who nailed the spirit of optimism this week. And I think it's because she has a master's in statistics. I mean, if you get through that, you better be optimistic. Joining us now on a victory lap with Wolf Research, Stephanie Roth. Stephanie, you nailed this. 3 months moving average, 116 out to a 185. What did the Gloom crew miss?
I think they missed that the spending, consumer spending in this economy is running at 3%. That's the sort of the discrepancy here. You don't have a labor market that's seriously deteriorating with consumer spending running fairly solidly. So if you take the 3-month average, now we're at 186. Call it 150 if you do some downward revisions, and the labor market's doing just fine.
Do you sustain a 2.x% real GDP? Can you sustain this good feeling out?
Sure, because we have productivity. I think this is kind of what explains some of this, is that we're perhaps starting to enter into a productivity cycle, and that helps explain some of the nuances here, that growth is running solidly and inflation is heading back down towards 2%.
So, Stephanie, do we take this stronger than expected jobs number? And to what extent can we apply this to the consumer? How do you view the consumer these days on the back of what we just saw today labor-wise?
The consumer's doing okay. And to be fair, for a lot of this year, you've seen good spending slow down. But now that rates are heading lower, granted, absent today, but trending lower, the consumer spending on the good side should start to pick up a bit. And we should still see a 2%-ish real consumer spending growth, something that's slightly above trend.
How valuable are the revisions? We had a huge negative revision earlier. It was a long story I don't understand. But now we've got constructive revisions, Stephanie Roth. Before we let you go, do you model in now a permanence of positive revisions, or do we revert to a more negative tone?
No. So what happened in the latest month is that a couple things. One is that revisions tend to be positive for the month of August. When you get from the first print to the third release, on average, you get about 49,000. And you got about 17,000 of the revisions came in August, and then the bulk of the revisions actually came to July. So I think there was a hurricane impact, plus the tendency for August to get revised up after it initially gets reported. And that's also the case for the September print as well. So it's possible next month we'll even be seeing some more positive revisions.
Well, Stephanie, thanks so much. Stop by the Bloomberg Surveillance merch department and pick up. I think we got a book of logarithms in there you can use. Stephanie Roth at Wolf Research on short notice in her day, nailing the optimism of this report a few days ago. Really interesting tape out there. Futures up 48. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mathieu.
And we have this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we still have stocks advancing after that big upside surprise for September jobs. Right now, NASDAQ futures up more than 1%. Dow futures up 0.6%. We have S&P futures up 0.8%. The 2-year yield, 3.86%. That's up 15 basis points. The yield on the 10-year, 3.95%, and that's up 10 basis points. To commodities, oil set for its biggest weekly gain since early 2023. Right now, we have Brent crude at $78 a barrel, WTI crude at $74 a barrel. Shares of Spirit Airlines still tanking, down 35%. That was after that setback in efforts to restructure its debt, avoid filing for bankruptcy. Sources are saying that months-long negotiation with bondholders, well, they just failed to reach a deal. And Google pumping up its search engine with AI technology. It's going to allow users to voice questions about images, also organize entire pages of results. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mathieu. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Drew Mattis Publishing at MetLife. Questions 50 beeps, maybe in hindsight. Could have been a 25er. Neil Dutta publishes at Renaissance. Macro labor market conditions are not slowing as materially as we thought. He goes on to say, at the end of the day, the Fed is still cutting policy rates, even as the economy grows. We need a measured perspective. Joining us now from Charles Schwab, Liz Ann Saunders, their chief investment strategist. Liz Ann, wedded to your act you've been doing this for 18 years. Wedded to your act, Liz Ann, is America moves from the Gartman lower left to the upper right. I mean, do we just flat out underestimate the resiliency of this odd American economic experiment?
Yeah, Tom, what I think has been happening that doesn't get a lot of attention is when you look at the structure of the economy. We know services is a larger share of the economy than manufacturing, but manufacturing is embedded in more of the leading indicators. So if you look at the LEI, the leading economic index, as an example, 7 of the 10 components are economic in nature, but they're biased on the manufacturing side. What you tend to see in a normal cycle is the financial components, the stock market, the yield curve, show some weakness first, then it morphs into manufacturing, and then eventually morphs into services. We've had a declining LEI for 30 months now. We have seen the weakness show up in manufacturing. Even in today's reports, that's where the job losses were. We just have enough liquidity, enough support, enough demand on the services side that supports the labor market. But I think a lot of those traditional economic indicators tend to have that more manufacturing bias. And I think that's the missing link in terms of a data report like this, and just much more strength on the services side of the economy relative to what we've seen in manufacturing.
So how do you think today's report, Liz, influences this Federal Reserve here?
Well, clearly you saw a huge shift just in the aftermath of the jobs report back toward 25 basis points. Just before coming on, I looked and you were at 90% probability of 25 basis points. That said, we've got another jobs report between now and the next Fed meeting. I do think, though, in the nearer term, we've got next week's CPI and PPI report. And in order to keep the market operating as it did today, which is in a good news is good news backdrop, I think you're going to need to continue to see tame inflation. There isn't much expectation for a reacceleration in inflation, but that would be a potential risk alongside an otherwise very happy news day in terms of the labor market report. So I think in terms of how the needle moves as it relates to the Fed's reaction function, now the spotlight goes back to the other side of their mandate, especially via next week and the CPI and the PPI.
So as you've been mentioning, the economic data is coming in, generally fairly solidly here. And again, with the jobs data today, what does that mean for earnings season? We got earnings season coming up, just kicking off again in another, 10 days or so. Hours, yeah, exactly. What are you looking for?
Yeah, so expectations got cut almost in half when we were within second quarter reporting season and outlooks were being disseminated to the analyst community. They were fine in terms of where they had set the bar for second quarter, but the outlooks were a little bit uncertain. So they cut third quarter estimates almost in half. So we're looking at around a 5% bar right now. That may be yet again analysts having set the bar a little bit too low, and you get stronger than average beat rates and percent by which companies beat. But one of the most interesting things I think about the earnings backdrop right now is if we remember back during the worst part of COVID, a record percentage of companies withdrew guidance altogether for obvious reasons. It was just such grave uncertainty. There was no way to try to forecast out earnings to the cents per share. I think a lot of companies either are using COVID, post-COVID as an excuse not to go back to that kind of precision guidance, way into the future. I think what that's left analysts doing is they change their estimates sort of closer to the vest. I know I'm kind of screwing around with the metaphor there, but maybe one quarter out, which is why we saw those big cuts in the third quarter. Almost nothing was done to fourth quarter, first half of next year. I think this idea, based on consensus, that we're going to get some, quick drop and then a V bottom up, I think that's unrealistic. But that's just the nature of the cycle we're in. Analysts will adjust one quarter out.
So I want you to speak to our listeners and viewers who have a view longer than the earnings cycle. We're in J.P. Morgan, October 11. Out 3 years or 4 years, I'm sorry, Lizanne, the American economy is intact and in place, right?
Yeah, I think the economy looks pretty decent. We have had hard landings in manufacturing and housing related. Assuming the Fed can stay in easing mode, there's support for that. I think some of the weakness in manufacturing and sort of the CapEx side of the cycle probably has something to do with election uncertainty. We'll assume that uncertainty leaves us at some point, but the services side remains fairly healthy. That said, I think as it relates to the consumer, the most important driver of the economy, obviously, I don't think you can look at the consumer anymore via a monolithic lens. We have seen more than just cracks down the income spectrum. That's where confidence is weaker. That's where we're seeing delinquencies and defaults pick up. And I think the labor market hanging in there is absolutely key to consumption hanging in there.
Lizanne, describe your thoughts on Ed Yardeni's 3-4 year view or 6-year end of decade view of Dow 60,000, SPX 8,000. Can you set up a vector out 4, 5, 6, 8 years?
You could, and look, Ed's been right. We've been very much in the same camp as Ed over the past four years or so in talking about the rolling nature of this and rolling strength and weakness such that you don't get an officially declared recession. You don't get a bottom falling out all at once. All that said, I don't envy strategists and economists who operate with year-end price targets or 5 years in the future price targets. I think that's a fool's errand, and that may be more than appropriate for an institutional client base, an institutional audience. But as you all know, at Schwab, we are individual investors, and some point in time forecast of what the Dow or the S&P is going to do, I'm not sure that that's terribly helpful. So it's one of the reasons why we don't throw our hat in that ring of forward forecasts.
Lizanne, thank you so much. Lizanne Saunders, Charles Schwab here on the equity markets. I thought this was great, Paul, today.
Yeah.
Kim Dawson, Scott Cronard, and
that?
Lizanne Saunders, just to frame out, there's a lot of people this weekend after the shock of this report, futures up 45. What do you do in the stock market?
Yeah,
it's a serious question.
The courage to be in the market, Tom, is kind of how you frame it and phrase it. And folks like Gina Martin Adams of Bloomberg Intelligence has been kind of telling folks you got to be in this market, stay in this market. You can move some money around every once in a while, but you need to be in this market. And again, we got the futures reacting pretty positively to a much stronger than expected snapshot of the U.S. labor market that we got today.
I'm in triple leveraged all cash, folks. I'm never looking at this like Sweeney, but we're down less than 1% on a weekly chart. We have a drawdown.
Yes.
A drawdown on the SPX of less than 1%.
Nope.
And we're all feeling like, oh, woe is me. Sam Rowe talks about this and Barry Ritholtz. If you go up, the history says you keep going up. Now, granted, at some point you don't.
Yep.
But my head's I think it's the Mets.
Well, yeah.
If the Mets hadn't won, I'd be more stable.
Well, Tom, you got a week to rest before you have to jump into your earnings season, because that starts with J.P. Morgan in earnest a week from today.
Yeah, we'll have full coverage of that. A lot of Bloomberg Intelligence people helping us with some other great analysts as well. Futures up 42. Dow futures up 225. The VIX 19.14. Dollar stronger. Big move in the dollar. From New York City, stay with us. We need to get the markets open. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mathieu alongside Tom Keene and Paul Sweeney with your opening bell report. So how are these markets going to kick things off after the September jobs report? It crushed expectations. 254,000 jobs added last month, the most in 6 months. The unemployment rate fell to 4.1% and hourly earnings increased 0.4%. Let's get to the reaction right now. Let's start with the S&P 500 now, up about 0.7%, 43 points, 5,743. The Dow up 0.5%, 239 points at 42,253. And the NASDAQ up more than 1% at 209 points at 18,130. We'll get over to the two-year yield, 3.87%. That's up 16 basis points. The yield on the 10-year, 3.97%, and that's up 12 basis points. To commodities, we have spot gold. That's lower at $2,650 an ounce. We have Brent crude at $78 a barrel. WTI crude at $74 a barrel. Quick look at currencies. The dollar stronger. Japanese yen weaker, down 1% at 148.63 against the dollar. Euro, British pound weaker. We have Bitcoin up more than 1% at around 61,000. At the open, also checking with Spirit Airlines, now down 34%. That is your Bloomberg opening bell report. Tom and Paul.
Consumption in America. We go to our consumption correspondent, Lisa Mathieu. Lisa, Costco wholesale this weekend, Costco Direct, Disney, 9-foot Halloween arch.
Ooh.
$349.97.
A bargain.
Like Mickey Mouse pumpkins. Here's a key line, Lisa. Assembly required.
Of course it is. They have them all out there.
But Lisa, it speaks to this job economy.
Yeah.
I mean, it's just, Paul, what do you say? It's like 2.x. How wrong have we been?
Yeah, exactly. I mean, again, we see this print today along with the wage data and the unemployment print, and it's pretty solid out there for most of this economy.
From a showbiz standpoint, folks, it's really good to have a cadence where someone shows up a month, a quarter, whatever, at the same time. And we are thrilled to bring you now Tiffany Wilding. She's a Pacific Investment Management company. They hate when I say that. PIMCO. She's their economist, and she has to speak to animals that are portfolio managers in bonds and equities. It's a tough job. Tiffany Wilding joins us here. Tiffany, you've been very optimistic about the resilience of the economy. What did you learn in this wonderful report?
Well, I think it maybe goes without saying, but I'll say it anyway, is that the U.S. economy was confirmed not to be in recession, I think, by this report. So obviously there's been a lot of worry and consternation as a result of the rise in unemployment rate, which had triggered the so-called Sahm rule, which has been a very good historical indicator of when the economy is in recession. So we look at a broad range of indicators, and we thought, the labor market reports that we saw in terms of the weakness was a bit of an outlier versus everything else that we were seeing, which was a pretty resilient U.S. economy. And I think the just overall strength in this report is basically confirmation of that. It's just one more point here, but we tend to get revisions of data that can change the picture. We got pretty broad-based revisions of the national income and product accounts, which just showed a very resilient economy with arguably more momentum and less downside risk, and that was last week. So I think overall things are humming along here.
How do you think the Federal Reserve is going to interpret this data as part of their entire mosaic?
Yeah, I mean, I think ultimately they still view themselves as restrictive relative to their estimates of the neutral interest rate. They still think policy rates are elevated. And we've argued that we are getting back to some semblance of a normal economy, at least something that looks more normal than it has at any time since the pandemic. And as a result of that, there's still reason for the Fed to be cutting interest rates. But I think that the data that we've seen over the last several weeks basically takes the urgency out of those rate cuts. So the way that we've been thinking about it is that, yes, you still get some sequential rate cuts going forward, but the probability that we get more 50 basis point cuts, that should go down just because the urgency here is much less with the economy humming along.
When you talk about humming along, how do your portfolio managers react to that? I mean, I think there needs to be literally a reset of the gloom this weekend. Tiffany, these are extraordinary numbers.
Yeah, I think we probably are like past peak fear here. I think the other thing is that inflation is the inflation indicators they have come down. Regardless of if the economy is in recession or not, we don't think obviously it's not. But the labor markets are looser than where they were a couple of years ago.
Yeah.
So we were coming off of these large labor shortages. Labor supply has increased quite a bit. That's been driving the unemployment rate somewhat higher. And so that, again, just in terms of broader inflationary pressures, the economy looks like it's in a much better place today than where it was a couple of years ago. So, in terms of getting back to the Fed, I think there's still reasons for them to normalize, again, just maybe not as quickly as possible or as thought before.
Paul, round it up. Dow 43,000. Now, we're not there yet.
No.
I'm making up a fiction, but I'm sorry, the Dow's up 256 points.
Well, round numbers, NASDAQ 100 right at 20,000 right here for that.
Thank you.
Tiffany, talk to us about the U.S. consumer. I see a data print like today, the jobs print like today, and it makes me feel a bit more optimistic about the U.S. consumer. How do you guys view the consumer?
Yeah, so I think that there's been a lot of conflicting headlines around the consumer lately. You've seen, various companies that suggest that the consumer is getting much more price sensitive, more picky.
Yeah.
And the way that we would just describe it is that we are coming off a period of extraordinary exuberance because of the government transfers and the increase aggregate real wealth that consumers had on average. We're basically just normalizing from that period. So again, this theme of getting back to a more normal economy. I don't know if you can remember now in 2019, but it was much more difficult for companies to raise prices then. And we're just kind of getting back to those kinds of levels. Furthermore, in terms of the delinquency data, a lot of people have been looking at consumer delinquencies with concern. We think that's more of a pandemic-related issue as well. You had a lot of so-called FICO inflation, where credit scores were inflated as a result of the things that were happening during the pandemic. So we think that resulted in some underwriting issues in 21 and 22. Those are kind of getting flushed out now. We think credit delinquencies will also be moderating.
Tiffany, thank you. Tiffany Weldon with us with PIMCO this morning. She'll publish. It'll be interesting to see what she says. Look to the PIMCO website for that. The market open, S&P up 41 points, NASDAQ up 1.6%. Paul, every day I know I'm going to come in and learn something. Thank you, Ellen Zentner. Spruce Creek, Pennsylvania. Have you ever heard of it?
No.
No clue.
Michael Barr, maybe.
Well, it must have been good enough because Dwight David Eisenhower and James Earl Carter went there to fish.
Okay.
And it's like hoity-toity, fancy trout fishing. It's a private thing on Spruce Creek.
All right.
And then there's the little Waniata River as well.
Okay, sounds fun.
I never knew this. You go fly fishing. So we had one of our listeners emailed in and really took issue that I was suggesting sturgeon would be had.
I was Googling pictures of sturgeon this morning.
Pennsylvania.
First of all, you gotta love Ellen Zentner, and I love you guys in the morning that you can do the jobs report, talk a little bit of Fed Chair Jay Powell, her conversation, then get into fishing.
Well, she's world class. She's been everywhere.
She has been everywhere, but really just kind of fascinating to kind of hear that conversation and see where you go. And I felt like I don't know, did she dish you a little bit about your fishing
all
knowledge?
the time?
Yeah.
Why are you nodding your head, Lisa?
Lisa, I was afraid to bring it up. That might be a sore point.
I didn't know sturgeon was that big.
I didn't know sturgeon was that big. All I know is the caviar tins. Like, isn't that?
Is that where caviar comes from?
Isn't it?
I did not even know that.
Isn't it the sturgeon eggs?
The only one in here that's ordering caviar. What do you got on the show today? Any ideas?
We have Kathy Wood.
Wow.
Later on, which I am really curious. I've been thinking a lot about. She was very early on innovation disruption. Tesla was a great investment for her. She's been in and out of it. I am curious to see what she has to say, but also OpenAI with its valuation, in which she's the one who thinks about future trends.
She does.
Tim and Carol this afternoon. We'll look forward to that. And of course, I'll have a lot more in the jobs report.
There will be no fishing.
So there'll be no fishing.
But there's usually wine.
Kathy Wood or wine. We went with Kathy today.
Happy hour starts early in the afternoon. With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Israel carried out huge bombing raids near Beirut Airport overnight, targeting Hezbollah leaders and facilities. The U.S. and its allies are warning of an uncontrollable escalation in the Middle East. Bloomberg's Joe Mathieu reports it's been difficult for the Biden administration to control events the last several months.
The level of influence that the administration has might really be diminished at the moment. Benjamin Netanyahu is clear in his goals right now, and we're, of course, waiting for a response to Iran. It's not just the bombing we saw overnight in Lebanon. We're talking about essentially a three-front situation when you add Iran and know that they're continuing to strike Hamas targets in Gaza.
Bloomberg's Joe Mathieu in Washington. Donald Trump is heading to Georgia today to appear with Governor Brian Kemp, the latest sign that he's patched up his rocky relationship. Later in the day, the former president is holding a campaign event in North Carolina. Meanwhile, Vice President Harris is visiting the Union stronghold of Flint, Michigan today. A Colorado judge sentenced a former county clerk to 9 years in prison for leading a security breach of her elections computer system inspired by false claims of voting fraud in the 2020 election. Former Mesa County Clerk Tina Peters was found guilty of most charges of election tampering and misconduct. Before sentencing, Peters pleaded that she did not deserve prison.
I'm not a criminal. And I don't deserve to go into a prison where other people have committed heinous crimes.
Judge Matthew Barrett didn't buy it.
You are no hero, you abused your position, and you're a charlatan who used and is still using your prior position in office to peddle a snake oil that's been proven to be junk time and time again.
Peters was convicted for giving a Trump confidant access to the election software used for her county. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Best one I've seen so far, Paul, Joe Brusuelas at RSM with a really, really interesting note of what we're getting wrong. In Joe Brusuelas' estimation, approximately 19% of increasing unemployment can be explained by nothing more than increasing labor supply. He goes on to also in an additional immigration, improved wages as well. And he says, this is key, we interpret this as not a sign of impending recession. Okay. I mean, there's that. Can you imagine? Everybody has to republish for Monday morning off this?
Yeah. I mean, this number came in, significantly higher than expected, and strength across the board by and large. I know they're going to dig deep into some of the sub components of this thing here, but I don't know. I think if you're the Federal Reserve, you're feeling increasingly confident that you're engineering a soft landing, have engineered a soft landing, continue to engineer a soft landing. So that's as bad as good a print as you could probably expect on the day.
I mean, I guess 50 beeps has gone away, right? We saw.
Yeah, I'm looking at the WERP function, Tom. It looks like a pretty, almost a 100% chance of a 25 basis point cut here is kind of where the market is right now.
But then what about after that? I mean, I believe it was Ellen said we have room to move.
Yeah.
So we go 25, I guess.
A couple hundred basis points is kind of what we're hearing from most of the experts there on the rate space. And then maybe they step back and take a look and see where we are. But it appears that, they front-loaded that 50, and we'll see where we go from here.
In 6 days, CPI.
Yep.
Then we get PPI, EIAO. Michigan retail sales out there as well.
Yep, and then you got J.P. Morgan kicking off earnings a week from today. We'll hear what Jamie Dimon has to say about. I mean, if you're J.P. Morgan, you touch almost every corporate customer out there, large, small, and different, all around the world. It's good to get a sense of where they think business
Percentage changes on a Dow up 248 points. Dow up 0.6%. NASDAQ better, up 0.7%. In the old days, that meant the banks were doing better. NASDAQ 100 up 1.2%.
And Tom, the small cappers, the Russell 2000 up 1.5%. So again, the small caps kind of broadening out a little bit.
Again, I look at the 10-year real yield. Nice interpretation by Ira Jersey on that 1.70%. Elevated 6 basis points off the uncertainty that we had at 8:29. We're going to continue here. Much more to talk about. We welcome all of you on the quarter, 99.1 FM, Washington. Bloomberg 1130 AM in New York City, in Boston, and in Cambridge. 92.9 FM, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mathieu. We are on records watch, with stocks getting a nice boost after U.S. job growth last month topped all estimates. The unemployment rate unexpectedly declined, and also wage growth that increased. So let's start with NASDAQ. Right now up more than 1%, 198 points at 18,116. We have the Dow up 0.6% at 42,269. The S&P 500 up about 0.7% at 5,740. The two-year yield 3.86%. That's up 15 basis points. The yield on the 10-year 3.95%, and that's up 10 basis points. That's a Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. This is important. There are 8 games ahead here for Andrew Orrick, head football coach, Harvard, on the season and the season forward. We're thrilled that he could join us today, and we'll have our coverage this weekend in Boston of Harvard football. Coach, tough loss to Brown. Early in a season, a coach learns a lot. What'd you learn in a tight loss to Brown?
Yeah, I learned that, a big thing we have to learn is how to put people away. We were in control of that game, and we had opportunities to, essentially end the game. And we didn't take advantage of those opportunities, and we let them stick around. And they're a very good football team that, when given the opportunity, they got opportunities to make big plays, and they made them when we didn't. So I don't think it was just me who learned. I think our team learned, like, in those opportunities, we got to take advantage of them. We can end that game and not have the ending that we had.
Andrew, you're now 2 games into the season here. What can you tell us about the Harvard football team this year?
Yeah, these guys work extremely hard. They prepare the right way, and they're learning how to continue to focus when tired. And that's something that, I think a lot of people have trouble with, being so mentally tough enough that you can focus when you're tired. And that definitely showed up on Saturday as something that we need to continue to grow with. But the work ethic and the detail and the preparation are there for us to be successful, and we have a lot of talent.
Tonight, and I'm sure it's not going to be taken lightly after Brown, UNH Durham. How do you approach the University of New Hampshire?
Yeah, they're a very, very talented team. They're top 20 in the FCS rankings. And it's all 3 phases that are really good. Their special teams is really schematically challenging, and they play really hard, and they have athletic, fast guys out there. Offensively, they have a transfer quarterback who's coming and has looked better every single week and is putting up, really good statistics. And defensively, they have 2 defensive ends who are All-Americans at different points in their career, played a lot of football. So this is a really big challenge for us. This is probably the most talent we've seen so far this year.
Really? Wow.
Coach, talk to us about what do you think the Ivy League represents this year? It's always been a competitive league, year in and year out. How do you view the league?
Yeah, there's a ton of parity in the Ivy League. Just off of last week, you saw that with what happened with us and Brown and the Yale and Cornell game where Cornell beat Yale. The skill level is very, very even. So those little details make a big difference in a lot of games, which we saw in our game. And that it just means every week we got to make sure we're preparing in the way to allow ourselves the best chance to be 1-0.
Coach, 30 seconds. A Friday night game has got to be different than Saturday. What are the players like Friday night versus resting, shall we say, into Saturday?
Yeah, we have guys that have class right up to our pregame meal. So normally you wake up and your mind's on that game the entirety of the day.
Not Friday night.
Not Friday night. They got classes that they're going to, and we talked about it last night. You got to be able to flip the switch once you get to that pregame meal.
Character building, I've so been there. Character building, to say the least. Coach, thank you so much. Harvard tonight. The coverage starts at 6:45, 92.9 FM, Boston, New Hampshire, at Harvard. We say thank you to Andrew Orrick, new coach. He's getting it down.
Yeah.
Tough act to follow. Legend.
Yeah.
Follow. Speaking of legends, Joe Mathieu comes back. Thrilled that he could be with us. We really focused on the Eastern Mediterranean last time. Joe, let me just take this domestic. What are you and Kaylee most focused on today domestically?
I was hoping to look back at the only season the Boston Patriots played at the Harvard Coliseum, but I don't think that's what we're going to focus on tonight. Look, this is a remarkable moment we're in, with three massive stories moving all at once that really kind of leave us guessing what the weekend might bring. What's going to happen with Israel? What's going to happen? Did we learn anything about the standoff here over automation with the dock workers, or do we put that away? And then, of course, finally, this natural disaster that has changed the schedules of all of the candidates. But look, they're rolling with some pretty heavy hitters this weekend, Tom. Elon Musk in Butler. We just got Bruce Springsteen along with Kamala Harris. Does anybody care?
Yeah, they're bringing out the heavyweights. Joe, are we in a final stretch? I mean, I'm not there yet, but am I wrong? Are we in a dash to November 5th?
Well, it kind of feels like it, because there's no other stop on the road, right? So you just do, who's going to slow down the car at this point? I mean, maybe they agree to another debate, but yeah, doesn't it feel like we're in closing arguments with 4 weeks left? Do we get another October surprise here, or was this it? I'm still waiting for the AI drop, by the way, the deep fake video that really blows people out and somebody reports it like it's news. There's so much time for things still to go wrong. When you look at all the polls within a point or two in the swing states, this thing is up in the air, as Anne-Marie Horduran likes to say, on a knife's edge.
So, Joe, we had a really strong jobs report here today. To what extent do you think the president and the vice president will bring this out on the campaign trail?
Look, they're going to talk about how there's more work to be done. That was the statement that we got from the White House immediately. We're happy about this. More work to be done in terms of housing and shoring up the economy, lowering inflation. But they're high-fiving at the White House today and at Harris headquarters right now, because they can tell a story about a soft landing, and they can do it the day after they suspended this dock workers strike. And these stories collide in a really nice way when it comes to jobs and the economy. I'm still looking at crude oil, though. Yeah. Are we going to still be filling our tank for less than $3 a gallon between now and November? That's going to have a lot to do just with the way people feel about the economy.
Give me an update on a swing state away from Pennsylvania and Georgia. Which one are you looking at, Joe Mathieu?
Boy, that's a great question right now, and I have to say North Carolina. I just keep going back to the state because it's within 1 or 2, depending on the poll that you're looking at, and it's been ravaged by this storm that might sideline voters in progressive Asheville. It might make voters throughout western North Carolina unable to vote early. It's just brought so much noise to the campaign. If you add the scandal surrounding the lieutenant governor there, I don't think there's anything more interesting than North Carolina at the moment.
Joe, lunch at Lockovers when we can. Joe Mathieu, balance of power there. Looking for Friday coverage. Kaylee Lyons and Joe Mathieu this afternoon. Paul, what a day. I mean, I said earlier I was making a joke about it between the Mets and the jobs report, but it's real. My head is spinning over this optimism of economic might in America. And I can hear 40 people out there right now on YouTube live chat saying, Tom, you're nuts.
And Tom, we're going to add to this conversation coming up at the top of the hour. Austin Goolsbee, Federal Reserve Bank of Chicago, president and CEO. He's going to be speaking with our very own Michael McKee.
Do you know where he's minted out of?
No.
Debate guy, Milton Academy.
Oh,
just
solid.
South of Boston.
Okay, very solid.
He came out, he got like C's. I mean, he could,
no
he
problem
barely
with
got
that.
out. But Milton Academy, and he went on to a sterling academic career, and now at the Booth School and holding court at Chicago.
Yeah, that'll be great. So we'll have Mr. McKee interviewing the chairman there from Chicago.
Some optimism, no doubt, from Austin Goolsbee, really pushing against this. The live chat, they're laughing at me about my fish. They're talking, I can't pronounce it, Lake Winnebago.
Yeah.
It's got to be 100-pound fish, they say, at Lake Winnebago.
To take it out, okay.
I think that's in Vermont or New Hampshire.
Yep.
It's up there. You can't go on there without the fanciest Boston whaler.
Sure, yeah.
You
gotta
can't have the little one.
No.
Like Tucker has. Tucker has the little one to go out, but you got to have that. It's been a wonderful week. We need to say thank you to our team for really, really important bookings. I mean, it's just great.
Today was off the charts, Tom. I don't know who was in charge of that. Was that AI booking our schedule?
It was AI.
Okay,
yes,
it was AI booking our schedule.
Special thanks to Robert Kaplan on short notice. We got a huge response for Robert Kaplan. I'll get out on Twitter. I'm not going to do it today. I'll get it out this weekend. It's my book of the election. It's called Tragedy by Robert Kaplan. Please stay with us. Austin Goolsbee next. Joe Manamassa.
Is it by the weight of the war, the weight of the gun? Got 15 minutes now, and I just don't care. I'm gonna take this all for granted when I get there. And I can stand it. I can't stand it.